All right. Hello, ladies and gentlemen. Welcome back to a special edition of Finance Junkies. As you can see, this stream was scheduled for 7:10 p.m. Eastern Standard Time. So technically, we're not 9 minutes late because it's 7:09 and this was scheduled for 7:10. Nonetheless, it might have been scheduled 3 minutes ago because I realized the other stream had some technical problems and it wasn't even attached to YouTube. So, but we don't have to talk about that. We are here on a Sunday night, 7 p.m. Eastern Standard Time. Thank you all for being here. And what are we here to do? We're here to discuss the one thing that all of us have in common, whether we've had a good year or a bad year. We're here to discuss the stock market because all of us are trying to make some money in the stock market. And I've got some special with me here that are going to be helping us discuss the stock market. Ladies and gentlemen, it's a 2-hour special of Finance Junkies. I have my fellow Finance Junkie, Carlos. I've got Matt Money. I've got Tannor, the Sofi guru, and we've got Jeremy Financial.
We have Jeremy's chair.
That was good.
Who we don't have is VITALY, who should be here maybe in like 30 minutes. We'll see if he's here. And KRIS, who for some reason, who knew about the stream for a week, decided that he had some errands to run that was for like his parents' anniversary or something at the last minute.
It was longer than a week.
It was longer than a week. It was 2 weeks when I told him about it.
Yeah.
So at least you got 5 of us here. Someone's gonna have to take the bear position to compensate for KRIS. But we're all here, and it's time to discuss stocks. Now, before we get into it, I have one quick question to get through everybody. Then we'll get into PayPal, Palantir, Enphase, Sofi. Thanksgiving is this week. Thanksgiving is this week. Tannor, I know you are sipping the maple syrup and you don't care that Thanksgiving is this week from Canada, but we're gonna include you in the spirit of inclusion in America. I want everyone to go around the room and say one thing they're thankful for. One thing you're thankful for. It could be 30 seconds and then we'll start. Let's start with Tannor. You're up first.
This year has been really impactful, or eventful, I should say. I just recently got a house. We just adopted a dog. I feel like I'm actually growing up for once. So more responsibilities than ever, but happy and stressed out at the same time, but fun. So I'm grateful for my family.
Okay, love it. Carlos, what are you thankful for?
Am I thankful? A lot, actually. I would say number one is my kids. As you guys know, I'm expecting number 2. I couldn't be more excited in a couple of weeks. Going to get number 2. My kids, my overall health, and my wife, of course. But I think also for the podcast and for this community, I'm an incredibly busy person. And it surprised me when you first mentioned the idea of wanting to do a daily show, like an hour every day. I was like, I'll never be able to last more than a week. And it's been, I've surprised myself with how much and how little you can do in a day. And that the dedication to this has paid off. So I am thankful for it. I'm thankful to have this, even though sometimes it's hard. I'm thankful to have this and to have the community that we're building here, as well as on X.
Okay. Matt Money, what are you thankful for besides money?
I would definitely say the thing that I'm most thankful for this year is the community that we've been able to build and being able to meet like-minded people that we can share all these ideas with. So that goes hand in hand kind of with the community that you guys are building with the Junkie Con that we did in Vegas, and just the Finance Junkie channel overall, and starting the Cash Flow Chronicles, and being able to meet Jeremy, all these great people that we're able to kind of share this with, because I know many of us probably share the same sentiment of we like talking about stocks, and sometimes when you go to Thanksgiving, some people just like their eyes gloss over. They don't want to hear about it, right? They're like, just can we talk about something else? Can we talk about football? Can we talk about anything other than the stock market? But I know you guys always enjoy that, so it's always a nice avenue to be able to hang out with you guys and be able to do that.
Okay, Mr. Jeremy, the king of finance YouTube. What are you?
Yeah, how thankful are you that you met AMIT? Basically, is what he wants to know.
I'm so thankful. I'm so thankful. I'm also thankful for my massive home in the Guard-gated community, my $12,000 watch, my massive portfolio. I'm just kidding.
Like, but all
those things are real, but
those things are
trolling,
real.
Okay? No, thank
Jeremy,
you.
I was about to say, I thought you were about to say you're thankful for me because you got so much money out of me at your house during poker. I didn't know how to play poker.
Yeah.
But
We don't talk about that, okay?
you know,
No,
it is what it is.
thankful to enjoy life, and thankful to have the ability to put in work, be productive out there, and still find it fun. 15 years in the game, and I still think it is so fun. Doing the dirty work, the conference calls, all that stuff. Obviously, thankful for the family and all that, but just to be able to enjoy life and like get enjoyment out of like the research process of stocks is like this many years deep. That's something I definitely love. So
Okay.
Yeah.
Very cool.
And then-
Yeah, I'm going to say the same thing as you. Yeah, I don't have I wanted a funny answer, but I don't have the funniest answer. I'm thankful for the community, man. This is awesome. We got 250 people here Sunday night. They could be watching football. They could be watching other stuff, but they're here talking stocks with us. So super, super fun. Thankful for all of you being here. And without further ado, let's get into it. I think we should discuss the hot topic that a lot of my community cares about. Let's get this out of the way for about 15 minutes. Palantir is up 215% year to date. That Carlito guy thinks they're the most evil company in the world. Didn't really like them, even though he made $1,000 on them because he bought 100 shares. Tannor likes a bank over Palantir. So, we got that. And then Jeremy actually watched some of my videos when it was at $7, watched some of Matt's videos when it was at $7 and was like, you know what? I'm going to buy some Palantir. And Jeremy's going up on it. He's done pretty well. So Jeremy, let's start with you. Is Palantir overvalued at $20? That's the question.
Ooh, that's a tough one. I mean, I think if you're judging just off of a short-term valuation, yes. If you're looking further out into the future, it's hard to say it's necessarily overvalued because we're at a very awkward stage of Palantir right now. You're at what I call the infant stage of profitability, right? And that creates this weird dynamic where their profits are very small because they just got to profitability. But usually when a company gets to that first stage of profitability, usually the rate of increase of the net income or the earnings per share goes up rapidly over that next 2, 3, 4 years. And so we got a very interesting dynamic here where if you look at the analyst estimates on the stock, they actually have very tame 2024 and 2025 earnings per share growth for the company, like especially for a company that just is getting to profitability. And then we also have the moving part of like what happens if the Fed lowers rates at some point this year, next year. What will that do to obviously all the money that Palantir is currently making off treasuries? We also have the dynamic of will stock-based compensation ever pick back up, and that could create a weird dynamic. And then we also have now what $1 billion buyback in the market. So we have a lot of random factors. So if you were just look at it, forward P, sure, it's overvalued. If you're looking a little deeper, I think there's actually a potential that Palantir is still undervalued, and we might look back at this time and say, gosh, we thought it was so expensive, but they ate up that forward P, which you've seen from a lot of great companies. I mean, I remember looking at Amazon when I first got on the market, or a couple of years after it. And shoot, back then I think it was maybe a $100 billion market cap. It looks super overvalued, and
Right.
they ate up. They ate up those forward Ps over the coming years and were far more profitable than anybody really anticipated. And now it's a $1 trillion plus company. So, but yeah, that's kind of where I'm at with that. I think it's a very interesting time to debate Palantir, though. I will say that because it's not a down and out dog anymore at this point in time.
Carlos, you were asking what's that headline that's going to make Palantir explode, and I think AI and maybe some of the government contracts was able to do that. However, you took some profits, which no one can blame you for. You got in at a $9 average, got out at 20. Do you think the stock's running a little bit too ahead, or do you think the headlines you were asking for are actually materializing in real gains for the
I was
stock?
actually looking at this morning, and I can't decide whether it's overvalued or just overpriced, if that makes any sense. Because like right now I'm looking at it, it's technically overvalued by 78%, but Jeremy made a lot of good points about what happens when this company reaches this tipping point. So I think it's a matter of like looking at the trend over the next couple of quarters. Plus you've got this like imminent S&P inclusion. There's a lot of potential good catalysts for the stock, but there's also these milestones that it needs to hit. It's like when you play pole position or a racing game, it's got to hit all of those milestones to get to the finish. And I don't think the finish is here yet, right? They can still probably have another year, and they have to perform and hit everything correctly. Otherwise, I think the market will give them a massive correction. Personally, it's just a shame. The environment that they need to operate in to make money right now is mostly war, and that's not good for any of us. But the other thing about it is, and I think KRIS brought up this point because I'm trying to think about like what KRIS might say, is that the rate environment affects them in the sense that when corporations don't have cheap money, they can't pay for services like Palantir. Right now, they're trying to reduce costs and get more free cash flow. And so when those rates come down and they have more access to cheap money, they can spend millions of dollars on Palantir services. And so there's still, it's like, we'll talk about this later with Enphase. There is, now that I think they've been legitimized as like an AI play, I think there's a pent up demand for their products or services that could be unleashed if and when a better rate environment exists for companies to use their service.
Could I ask a couple questions? Because I don't cover this company close enough, and I haven't researched what the total impact of S&P inclusion would be. But what is your guys' thoughts on how much that would run up the stock from them purchasing in?
What is it now? It's $20.
It's
$20. It's $43 billion market cap. Tesla ran up 40% on the way to the S&P 500 inclusion, and Jeremy, you were a part of that run up. I mean, they have all the criteria. In 6 months, you would imagine it happens. Do you think that could play somewhat of a role?
It's probably already playing a bit of a role, to be honest.
Okay.
Yeah, I think it's already playing.
So.
Yeah, a bit of a role. By the way, quick mention, and I think this adds to the confusion of Palantir right now. Is AIP. And, when Karp talks about, a customer being able to go through the boot camp in 2 days versus, 6 months, what does that do for the sales cycle? I think that's another confusing part, because we might be at a point right now where there's a fundamental change in Palantir's business model for the better. But we got to see it in the numbers. So it's that weird, awkward stage of like, there might be a game changer here, but we need to see it come over. But anyways, I just wanted to mention that. I'd love to hear from you.
Yeah, because that's where my bias was, right? I mean, I onboarded with Palantir, what is that, 6-something years ago, and that was like a 6-month sort of process, and it was like, what is exactly going on here? And in that kind of iterative process where they weren't really super upfront, and it wasn't like Palantir had all the reins as well. It was kind of a collaboration between the two companies to fully understand. And so now it seems like the dynamic has shifted a little bit, where Palantir is more in the driver's seat to say, hey, we have the products. This is what you're going to do with it. And it's a lot more outlined, considering we were one of the first commercial companies to really utilize Foundry. It was mostly a government contractor just before then. So a lot of the things in Foundry were kind of grassroots. Like, a lot of things have been changed over time just because they were building it literally on the fly when they were kind of deploying it to us. And some of that might have already been pre-built, but they were just kind of making it ready for commercialization and actually getting it moved into a development sort of opportunity, rather than it kind of being the testing opportunity in the background. So it was definitely interesting. But that shrinking of that deployment process into more of a front end, like, this is what you're going to get sort of mentality is definitely something that I think is better, because when you look at specifically comparing the two companies, Microsoft, specifically Fabric, and what they're kind of trying to do with that, and now moving into Palantir, I think the big wall was it took several months to truly onboard Palantir before. And that was my experience as well. And now that you're doing it and starting to get it, at least in the company, it might not be fully developed and fully fledged into the company, but at least you're getting a small little root into the company, and the tree can grow over time, as before it was kind of like this long drawn out process.
Can I ask you a question as someone that uses the software every day?
Of course.
Because you use it every day, right?
Yeah.
With as long as you've used it, what would you say is the overall increase in productivity? Like, does the software actually deliver on the promise of an outsized increase in productivity for the upfront cost financially as well as the time? And if so, how can you quantify what that increase in productivity is?
The thing that I would say is most, I don't necessarily know all the licenses of the legacy systems that we've gotten rid of, because that's not really my department. And I'm also not, I'll just be completely upfront, I'm not the person that's really working on the back end with respect to the data lakes. I'm more of an end user. But from what I've seen, I've been part of many projects at UDOC, Undisclosed Oil Company, where we've taken months, if not 6 months, and sometimes a year, to create products and programs that now Palantir and Foundry, you can create modules within a week or two that completely disrupt that entire process. So now no longer do you have to hire some expensive consultant to come in to be able to, get you onboarded. And it's like now you have literally a hand-in-hand collaboration between Palantir and our engineers to say, hey, you've been working with us now for 6-7 years. You know exactly how our business runs. We want to develop this. And one of the cool things that I've talked to with some of these guys is they're almost as quick. I don't want to say as quick as the Palantir guys are, but they know and have been integrated into their language on how to create things now, because they've been working with the product for 6 years. Is they say that they can basically create things at a third speed. So about as like, say, if you were to be talking about something for 60 minutes, you'd be able to create it in about 3 hours. So if you think that they're going to be able to walk through it and be able to talk about something, they're going to be able to do it at about a third the speed of which they're talking, which is pretty impressive, because if you're able to kind of walk through a certain amount of processes and it takes an hour or two to be able to do it, and within 3 hours, 6 hours, a day's time, you have that ability to kind of create that module. Think of how many legacy systems you've created over the course of 100 years, which our business is 100 years old, over 100 years old. How many things have been created over time that weren't necessarily built fundamentally around data and fundamentally about how data flows within this modern sort of world that we're in. Think about all the different gauges and sensors in your home that you used to have. You never used to have an air conditioner going directly to your cell phone, or like lights being able to be turned off by your cell phone. Now you have all this data that's being integrated into things that we didn't necessarily think we'd have to prepare for. And so that being now applied to a digital world where you have literally hundreds of thousands of gauges on a facility sitting 150 miles offshore the Gulf of Mexico, it's pretty badass. So to answer,
Matt, overall, you do think it's a little overvalued right now, though. We'll just do 30 seconds and then we'll move on. You do think it's a little overvalued at $20?
Yeah, I mean, I think at $20 here, it's a little bit overstretched. I mean, you think about it, the price has doubled since the direct public offering, right? But back then there was only 1.5 billion shares. Now there's 2.3 billion shares. The price has doubled. And so market cap of 43 billion, the revenue this year will be 2.2 billion. I mean, that's pretty hefty, right? The thing that I think it will grow and help a little bit is over the next 2 to 3 years, I think we're going to get closer to $1 billion in total cash flow. And that's cash flow from operations as well as interest income. So I think we'll get probably north of 900 million in fiscal year 25, because I think we're going to get close to 650 million in fiscal year 2023. So it's kind of hard. I think a lot of people are used to evaluating businesses on a net income basis, but share-based compensation is still a huge piece that dilutes that gap net income down to almost negligible.
All right.
Sorry, man.
Tanner, I got to move on to Sofi. One last thing, and then I'll go to Sofi. Go ahead.
Well, I do have more questions about Palantir, but considering we have so much time, I don't know. We'll move on to Sofi. But 2 questions. One, with that growth rate, does that line up to other software companies that are also getting this level of a premium? And then 2, because I hear this a lot whenever listening to Palantir, that rates right now are determining how many sales that they're getting because companies are not trying to grow at all costs right now. But wouldn't that impact similar software companies like Salesforce, for example, trying to expand, and all these other companies that might be succeeding during this time where Palantir's having, in my opinion, a harder time growing?
Let me get Jeremy into this one. Jeremy, I mean, this is kind of the bear case around Palantir, that their growth sucks. Valuation does seem kind of stretched. What do you think about the growth rate in comparison to like a Salesforce or another company?
Well, I think there's an interesting dynamic. One is in terms of anything AI related on the software side, from what we've heard from like the Snowflake CEO and the executives there, they said 2024 is the year you're going to really start to see that revenue roll in. So if you look at the latest quarter from Palantir, they actually had a massive reacceleration of growth on a sequential basis. But also if you look at the previous year, July quarter to the September quarter, I think they grew revenue like 4 million versus this most recent quarter. I believe they grew 25 million on a sequential basis. It was previous quarter was 8 million versus 25. So I think there's something going on with Palantir that has started like a reacceleration of growth. And there's a high probability, I think the growth rate could expand more overall in 2024, especially if we're talking about a sales cycle going, from let's call it 6 to 12 months to potentially, days or weeks or maybe a month or two or something like that, right? And so I think that's a big factor. Now, valuation, I think this is worth mentioning as well. Palantir is going to get put into the SaaS category, more and more over time. Like that's just how it will be valued in the market. SaaS companies usually trade at, even if they're lower growth, like usually high 20s forward Ps, low 30s, even if they're low growth, right? And so if we think about a Palantir, I think they're growing based upon what analysts have. I believe they're growing at about, we can call it 68 or 70 or so forward P. So let's call it about double up or just over double up. But the way I think about it is Palantir going to at least double up the average SaaS company growth over the next 5 years? And in my personal opinion, I think that's pretty easy for them to double up. I think there's a high probability they could triple up or quadruple up, if not 5x the growth rate over the next 5 years of the average SaaS company. So I think that's something to be factored in as well. But and I think we're not going to get a lot of clarity really until 2024 and we actually see these numbers. 67 is what analysts have, but they could be way low on those projections. So but
I think building on top of that, Jeremy, to kind of go back to Tanner's kind of thought processes, are other companies kind of experiencing this low growth rate? And Snowflake is going to be very telling at the end of the month because they specifically in their 2Q earnings mentioned that they would see a potential slowdown to either flat or if not even anemic growth going into the third and fourth quarter. And so if that's the case, then that's extremely bullish for Palantir because not only do you have a new product that is developed in-house, but second, now you have a competitor that is going from which everyone claimed was a crown jewel. Warren Buffett invested, a lot of people invested in their IPO, but ignored Palantir on their direct listing. Now you have this anemic company that was the crown jewel now showing kind of some chinks in the armor, which to me, I think is going to be extremely bullish for Palantir. But I guess we have to wait to the end of the month.
I think what's really
ladies and gentlemen, we got a
Palantir
special guest who just joined real quick. Let's add him to the stage.
Hey,
VITALY, you're live.
He always looks so angry.
I just heard you say chink, so there you go. Anyway,
brutal.
You're in Jersey, right? You're back in Jersey?
Yeah, I'm back. We just had dinner because you guys wanted to do a 3-hour extravaganza. We rushed through dinner. So here I am. How's it going, everybody?
You ate in the drive-thru? You ate like while you were going through the drive-thru?
I was like, hurry up, eat that fucking dessert, kids.
Dip and shove it in there.
Okay, so
we're talking about your favorite company. We're talking about Palantir.
Listen, we love the Cheesecake Factory. We got to get out.
Cheesecake. Hey, what were you not coming to Vegas for, man? You missed it. You missed a night to make it easy money, man.
You mean I thought Carlos was the one who took all the money?
I did. I'd love to. That would have been great if it was. We had a couple pots. Was just you and me left. I'd love to see how that played out.
Ooh,
because that was good. That was good.
Should have gone all night.
Yeah, that was fun.
Yeah, that was weird because I added to the stream and then all I saw was AMIT. And so nobody else. I'm like, what is going on here?
That was good in the intro. We messed up the stream link in the beginning, so we went through some stuff, but we're here now. I think let's conclude on Palantir because we got to move on. Okay. So we'll move on to another fun stock that all of us I think have a little money in. I think most of us. But actually, one guy doesn't have money in this stock, and he was persuaded by not only you, Tannor, by our boy Tevis on a 1-hour-long podcast to buy this stock. And it's probably a good thing he didn't. Jeremy, what are your thoughts on Sofi right now that went up to 11.45, came back down to 6? You got the chief risk officer selling 50% of his stake. Maybe a 2024 recession, delinquencies go up, banks maybe not the best place to be in. What are your thoughts right now on a fan favorite, a FinTwit favorite, Sofi?
So Sofi, first off, on a positive note, the growth rates are extraordinary out of Sofi, like really impressive. Customer base, pretty darn impressive. Average credit score, pretty impressive. There's a couple issues that I keep coming up to in regards to Sofi. One is they kind of get put. I mean, let's just call it what it is. They kind of get put into a bank category. And I know some people say it's a tech company, it's not a bank. They get put in the bank category. And unlike a Palantir, which gets put into more of a SaaS company valuation, like those valuations are extraordinary, right? Banks are garbage valuations. Like that's the worst. Like, you know, many of the big financials trade at 8 forward Ps, 12 forward Ps, 10 forward Ps, and things like that, right? And so SoFi might always be grouped into that kind of bad valuation category. So that's something that kind of works against them a little bit. But I'm trying to really still figure out, like, do they really have that great a technology that other companies are going to keep wanting to adapt? And I hear about Galileo, and I hear about different other big financial institutions are using SoFi. And so that's what I'm still trying to quantify is like, how big is that? And I'd love, you know, Tannor and whoever else wants to speak about SoFi, kind of talk about that side as well. You know, because I think a lot of us just kind of think about SoFi like the app and like it's a consumer experience, you use it, but the savings account.
What is your take on that? We've had several debates on this, on whether or not it's a bank or it's a fintech technology company, whether it is actually disrupting other banks, or it has anything proprietary that other banks can't copy, or it hits a user base, an age demographic that the Wells Fargos and Bank of Americas are not capturing. And in 10 years, when they go get mortgages, they're all going to SoFi. Like, what's your take on that debate?
So Tannor, I think this is where you come in because you're obviously a big SoFi bull. So I think you could kind of defend it pretty good in this situation. I'd be interested to hear your thoughts here.
Yeah. So, sorry, repeat your question really quick, Carlos.
My question is, how do you weigh in on the debate that we've been having on whether or not SoFi is just a bank, or if it's really a technology company and capturing a certain demographic that it's going to pay dividends for us as shareholders in the future?
I think that, you know what, people can say it's a bank. They're going to have, you know, a lot of risk on their balance sheet just because that's their business model. So you can value it like a bank. The problem that I have with that is, let's say it trades at a 1x price to tangible book value, or you know, something along these lines, just bare bones that it's a bank, but continues to hold up a 30 to 40% growth rate, then it's still going to grow at a 30 to 40% rate without having an increase in multiples. I am pricing in into my projections on the stock, saying that I also think that there will be multiple, not compression, but expansion along with fast growth rates. But call it a bank, don't call it a bank. I think that it's not going to stop the growth of the actual company, considering that they won't have to dilute their shareholders, and so they're not worried about stock price.
Is there any data on SoFi siphoning customers from the other big banks?
Well, they said nearly all their customers are from the top 5 banks practically. They just see that's where all their customers are growing. In their last call, they said every single one of their product lines is gaining market share. They just, out of the 2 million accounts that they have for SoFi Money, which is their checking and savings account, they brought in like $15.7 billion of deposits. They're one of very few banks that are actually growing deposits this year.
Yep.
And that's all coming from the big guys, you know? So, and then on the other side, it's like, they're also not trying to take away from the Robinhoods or, you know, a bunch of these other banks like Chime. They service those clients. Those clients, the reason why they have accounts with Robinhood and accounts with Chime is because of SoFi through Galileo. There was a quote that that SoFi did all the way back whenever they were IPOing that said 90% of the accounts that are opened in the United States through neobanks was due to SoFi. 90%. So now they are stepping away from just neobanks and these sorts of things through Chime and Robinhood and all these things, and they're going after large financial institutions where there's 500 million accounts that are being serviced in the United States alone. And so if we can land some of those whales, I think the amount of account growth at Galileo's side could be massive. Some people are taking that bet. Some people are waiting on the sidelines, but I think it's just time's going to have to tell. And I think next quarter will be a big quarter for SoFi.
Yeah, I think one of the things I did want to add in, and channeling my inner KRIS Patel here, you know, because he's more the regional bank focused sort of gentleman. A lot of those have seen outflows, and a lot of them would be similar or somewhat smaller than SoFi is here today, and SoFi is seeing inflows of capital. So I think that that's something to truly note. While they might not necessarily be taking too much from the major banks, at least in this first 6 months of this year, first 9 months of this year, they're definitely taking market share away from some of the smaller regionals while they've had some liquidity issues. And second, I did want to bring up, I was having a conversation. I would love to see SoFi grab a little bit more from Robinhood and some of those other clients. Personally, I think a fully integrated application that combines natural banking and investment portfolios is something that's still kind of missing in the United States. And I mentioned it on X yesterday, and I kind of got a little bit of slack from data-driven investing in KRIS, and I completely understand where he's coming from. It's only 1% of their revenue, but my thought process is why is it only 1% of their revenue from an investing platform perspective, right? I think that's something that could be much larger, and if they are able to accomplish that, they might be able to steal market share away from folks like Robinhood and be a fully integrated bank that many people would gravitate towards.
Yeah, I think there's so many components that they want to build on. It's just a matter of what's going to return the largest ROE right now and make some real money. And obviously the invest platform would be very big, but considering that transaction revenue and all these things, what we're seeing at Robinhood, it's just not a focus for them this year. They'd rather get into things like checking and savings accounts with high net interest income that they can just make a ton of money by people parking their cash there. So I think it's on the roadmap to make a really good product, just not in this environment.
Hey,
that's a good point.
I got a serious question for you in just a moment. But AMIT, what do you guys usually do on this channel? I see a comment here that says, "I want my wife to get a nurse outfit." Like, what's really going on?
This is the after hours.
Yeah.
What do you guys usually do on
Oh,
this
no, that's
channel?
TJ. That's
You never heard of Skinamax?
TJ's in the hospital right now. He was one of the guys. I don't know if you met him when we were in Vegas. He met up with us in Vegas. He got sick after the Vegas trip. He's in the hospital right now. So he's joking that he wants his wife to have a nurse outfit.
He's been in the hospital for like a week now. And so but his wife's been with him for like the whole time.
99% of the time.
TJ, I'm sorry Enphase took you out, but it's going to come back.
Oh, we're going to talk about Enphase soon. We still got to talk about that.
Okay, so Tannor, a couple serious questions for you here. So what makes Galileo special that they can keep, let's say grabbing either smaller financial institutions or bigger ones? And then how do they monetize that? Like, how can they make money off that or leverage that more for themselves?
So what makes them exactly special in their market? I wouldn't know the exact details to what separates them from Chase's in-house, market or card management program. Not sure. How they make money is they're offering these companies a risk platform, a place where they can issue the cards and send it out to their customers all on one platform, and then they make a percentage of the actual transactions whenever people are tapping their cards. So MasterCard has a percentage of that income. The neobank that potentially has the customer, and then so is Galileo. So they're just offering the card program that all these banks want to sign up for. And you can get into a bunch of the newer fintech style programs, like potentially also enabling direct deposit for their clients, so then people can bring in money. It's just trying to make things a little bit easier. If you can make switching costs easier, then hopefully fintechs can, get more customers over time. I did want to,
Tannor, you think it's undervalued though right now? You think this recent dip, SoFi is undervalued?
No, I'm buying anything like I told people, anything under 7. I'm absolutely trying to accumulate a lot of shares of SoFi right now. But also, I'm a long-term holder. I think that KRIS Patel and I can also be right. Like, I don't think that this is the number one industry to be looking into in this macro environment, but I also think that it's an easy buy for me, that I can sleep well knowing that this brand is going nowhere. They're growing like crazy. And whenever macro sentiment changes, which I won't be the person to make that determination of when it changes, but when it does, I don't want to be not able to get in whenever the stock does start to skyrocket. And we're already starting to see that. Like, I find I'm looking around at some of these payment companies that have gotten really depressed recently, and it took one day for Adyen to turn a 40% increase in their stock price. A 40% increase. I don't want to be on the other side of that whenever they put out news, right? I think that PayPal has that opportunity. I think that Adyen has more time to run, and I think that SoFi could be next on that list.
Can I ask you my question that I like to ask is the headline? What would be the headline that happens that we see on on finance news that makes SoFi jump 40%?
I think it would be a bunch of stuff that would be a little bit boring. So SoFi deepens the relationship with BlackRock to sell an unlimited amount of personal loans. that would just, I think institutions would just buy it right up. They need somewhere to easily dump all their loans, and so they can go out and re-originate and keep that cycle going. I think the problem with SoFi right now, in my personal opinion, is that bears are worried that growth is going to slow because we won't have new capital to distribute to our members.
Tannor,
so I think TJ actually, go ahead.
No, I want to hear from you, Vitaly, and also in regards to Palantir, if you have anything to add there, and SoFi. But Tannor, one quick question here is,
on.
well, one quick question here would be, in regards, are they trying to take on the risk of these loans? Like, do they want to be more asset heavy, or are they trying to just be asset light and just be kind of like a fintech, almost like a PayPal's kind of doing, where they're selling off their buy now, pay later loans and things like that?
I definitely think that they want to be more asset light. I don't think that they have the opportunity to. I think it would be very hard for them to sell their loans in this environment, considering, how risky personal loans are right now, and how a ton of large banks are just dumping loans onto the market. And so it's almost like trying to sell your real estate at a premium during a market crash. It's like, your house might be very special, but the comps in the area are depressed. So it's very, very hard to sell an individual property. That's sort of how I feel about it. I think when the comps change, SoFi will shine even more. And I'm happy to wait that out, because in my opinion, there's no way that we're not going to continue to add members, hit GAAP profitability next quarter, continue to fund ourselves. It's just a matter of if we kind of hit a roadblock in growth in Q1 of 2024 before rates start to come down. Because the second rates start to come down, that's going to price SoFi's loan book so much higher, and then it's profit. So it's funny. Like, it sounds like boring banking, but it can lead to billions and billions of dollars if rates start to come down, especially if it comes down at a very accelerated rate. The high rates that SoFi has for their loan book would be tons of money, tons. But I did want to mention, because Matt Money was talking about SoFi taking, more share from large banks. I wanted to read this Forbes article quote really quick, and then we can move on from SoFi, or we can ask other questions. But
we got to give Vitaly's opinion after this. See what he says. Go ahead.
That this article points out the winners and losers
so far
in 2020 and 2023. So those 2 years. In
2020,
sorry,
share your screen so we can see it.
There's just one quote, Carlos. There's just one quote.
Yeah, it's just a single quote, and there's just ads everywhere. So I'm just going to read it. In 2020, SoFi accounted for 1% of new account opens, and Wells Fargo accounted for 8.1% of new checking account openings. Okay, in 2020. In the first half of 2023, SoFi's market share quadrupled to 4% of total checking account opens, while Wells Fargo dropped to 3.5%. So now SoFi is opening more accounts than Wells Fargo, and that took 3 years worth of difference.
Wait, hold on. But 4% of their existing?
4% of the total amount of checking accounts that have been opened in the United States went to SoFi. Okay. So it's not a 4%.
Well, remember,
right.
Remember, they said they were stealing from conventional banks, so it makes sense that their growth would be bigger in that case. But what I was going to say is, when Carlos asked what is going to change, what piece of news will make the stock go up, it's obvious: profit. Okay, a bank just needs to make money. As soon as they actually make money, this GAAP profitability you keep talking about, this is not a sure bet right now, that maybe next quarter it happens and things turn around, or maybe they don't, and we push it out to 2024, like you mentioned with the rates. So that's why the market is not pricing in this massive growth that's to continue and to be profitable sooner than you possibly think. I'm not saying it's not going to happen. I have shares as well. But the reality is, a bank needs to make money in order to really shoot up and show, like when JPM this quarter did great, stock did really, really well because they showed more profit, they showed more growth. That's what we need, not just hope of GAAP profitability.
Well, okay, so I'll add two things.
Or
I think
real
one,
profitability.
stocks go up not based on inline expectations; they go up based on surprise expectations. SoFi has been guiding for like 5 quarters now that they're going to be profitable in Q4. I don't think that there's a single institutional investor that doesn't know that by this point. So I don't actually think it'll go up just based on inline news. Like that is profitability is expected next quarter, and we've done nothing but beat expectations every quarter since they've been a public company. So I can't believe that they would miss it.
Well, I hope they don't, but I'm saying it's not a guarantee. Like you're sort of aiming. We've been talking about this for a while, that we're aiming for Q4 for a year at least that I've known you, Tanner. So I'm just saying things sense a surprise that not everything is peaches and roses, and maybe the market knows. They usually predict pretty well what's going to happen, at least in the short term, not in the long term. So I'm not arguing with the long term here for you.
Yeah, yeah.
Because we know KRIS believes it's going 100 billion, and
Share screen a minute. While
did you
Vitaly's
say
talking.
share screen?
Yep.
Yeah.
All right. But I'm saying, I do believe this bank is going to go up, and Galileo is my bull case, by the way, Jeremy. And I want to talk to you for a second about this. But the reason I always invested, because I actually don't care about banks, and I do have them in my dividend portfolio, but I always felt like Galileo could be something for all of these new fintech plays and any sort of new, anyone that needs anything with fintech, maybe SoFi can take, and because like the new up and comers, the new startups, I don't think they want to go to JPM at the end of the day, but they will, of course, if there's no good choice and it's better rates. So if SoFi can prove that Galileo is a better product, which I hope they do over time, I think they will go there. And that's where my bull case lies, that eventually that they will get a good amount of business, that it takes over not just the banking side, it takes over the banking side, but I know you guys are betting on the banking side. The other question maybe to Jeremy is like, I don't think you're ever going to invest in this or until they hit net income, right? Isn't that your whole thing, that without net income, there's no point to actually even look at the stock?
And net income was actually worse in the last quarter than ever.
Yeah,
Well, it's negative. It's all negative here.
No, but can we stay on this for a sec? Because looking at this chart, and it only tells one side of the story. So this is
Tanner's like, turn your monitor upside down.
Yeah.
Can you hit reverse? Can you hit inverse button?
Like this.
This is gap net income.
Like if you flip it, it's great.
It's great.
They wrote down over 200 and I forget what it was, 200 and something $1 million of goodwill off their books. So it's always been the story that they were going to be profitable by Q4. Why not, considering that we are going to want to be profitable going forward, that we dump all the goodwill that we possibly can off of, acquisitions that we have maybe overpurchased during a bigger hype cycle. If you actually look on a non-GAAP basis, we very much improved on our profitability. It actually went down to negative 19 million from 47 million, negative 47 million the next quarter. We'll be profitable next quarter. So it's just a write-off, but that has caught a lot of articles where people are like, they missed earnings by a ton. It's like, no, they willfully chose to do that. And a lot of companies actually did that this quarter.
And Tesla investors are looking at SoFi guys being like, first time?
Yeah, seriously. But
yeah, it happens.
So, Jeremy, what did you think about that net income? Is this really why you're ignoring SoFi? Because it doesn't match your criteria for the most part.
Yeah, no, definitely not. Because I do look at SoFi and I'm like, it does seem like it's going to, at least on a non-GAAP basis, get to profitability very soon. And so that's what's interesting. It's just, once again, are you paying an overvalued valuation or undervalued? And so that's when I got to try to run GAAP numbers on a forward P basis and try to figure out, like, what numbers are we really going to be at for next year? Like, what's a true forward P for next year if the company's profitable on next year, if they even are? We'll see. What about 2025? What about 2026? And then kind of work backwards and then look at the valuation, say, does this make sense? Because SoFi should command, once they get to profitability, especially, they should command a premium over the average bank stock, certainly, right? Because they got far better growth. But the question is, how much more? And that's the hard part to figure out. And that's what I'm still trying to research and figure out in regards to this one. So,
Tanner, have you done any forward calculations?
So they already are at a pretty, they do command a higher valuation than other banks in terms of a multiple. So that already is the case. I don't think many people are turning too much of a blind eye to their growth. It's just a matter of if that growth will continue for the next couple of quarters. That's at least, I think, the only bear case that they have left is if rates don't start coming down soon, how slow will the lending department get?
The lowest
So,
price I've ever
but
seen.
still, you
on
didn't
the-
answer. What are you
one sec.
projecting, Tannor, for 2024, 2025?
I don't really have projections. I'm sure I have done a write-up on it before, but I don't have it in front of me. I can show you though, however, this is one thing that I really like about SoFi. So a lot of bear cases have been thrown around. Stock has gotten depressed, but if you actually go back and just look at the earnings that SoFi has put out and guided for into the future, guide has continued to get revised, where if you look at their competitors, I always like to look at Lending Club. They're a very similar business. They lend out unsecured personal loans, get checking accounts, use the deposits to help the personal loans. That business model, right? They have constantly revised their earnings results lower and lower and lower every quarter. SoFi, on the other hand, has continuously revised upward in the exact same market. So lending is not going away. In fact, the total addressable market's growing like crazy. Fintech companies are picking up more of the financial services pie than ever before, and that's supposedly accelerating. They saw more checking account opens in all of the United States across all financial services, more in the first half of this year than they did in the last 3 years. Not combined, but in the first half, more than the other years. Okay, so I believe that financial services are going to pick up. I'm just looking here. The first 2023 non-GAAP guide was showing a $270 million EBITDA expectation. Now they're expecting $400 million for finishing out the next quarter. And so what I'm getting excited about whenever we see next quarter, what expectations will be for 2024, but by the end of the year, how much are they going to revise it upwards? Because they've never missed a quarter. They've always surprised on the upside, always have beat. And for some reason, people think that's going to turn around. I don't know.
So I'm looking at the chart. The all-time high is $25. The all-time low is like $4.25.
That was with the SPACs. That was
Right.
Chamath.
So
Yeah, I never
what
think
is
that this should have been
what is
25. I
the-
think it was overpriced then. But
So what I'm saying is, okay, is $4 like, what do you think is the fair valuation right now? If you still think it's a bit rich, or even a question for you, Jeremy, like at what price would you be like, it's just so stupidly cheap, I've got to buy some? Or does it need to be making? Do you need to have some level of profitability for you to even consider it?
I have to be confident in what I can project out for future net incomes. Until I'm to that point, I can't buy it at a penny. You know, it's got to be like, I have to be able to be confident. Like, I think this is about their net income next year, the following year. I haven't got to that stage yet with SoFi. So until I get to that stage, it's a no touch for me, regardless of price. So
they said that
It's actually smart waiting, because I personally, and I'm sure many have on this channel, have been burned by buying companies too early that make no money. And we're still in those companies, and some of them, even Enovix is scary to me, even though I've invested not a giant part of my portfolio, but still enough money to care if I lose it. So yeah, these companies can go to zero. Absolutely. Where Mad Money is correct. Those companies can't go to zero because they don't make anything. SoFi is not there yet. And that's why I agree with Jeremy that even though I do have shares, I am not necessarily saying that we're going to the moon. I think it's just a wait and see. And maybe I should have waited longer to buy in, actually.
So SoFi does make money. They are cash flow.
You know what I mean? I think you know what I mean.
No, but just looking at it on a GAAP basis doesn't show the whole story, because there's stock-based compensation, depreciation, amortization.
It's the same place that Palantir was in a year,
Right.
18 months ago, where they're actually making cash flow and adding it to the balance sheet. It's just from a share-based compensation piece, it shows up as GAAP net income negative.
Right, and I think Palantir is a very good example of when sentiment changes, it changes hard. And the stock price can change very quickly.
Double on you at that market cap. Yeah, it can double on you overnight.
Right.
Or
right.
half on you.
So I've at least from what I can see, I think SoFi will.
We'll talk about the halving when we get to Enphase.
In terms of good, like a good brand,
Mad Money with the
increase
zingers
in
here.
members is going to be consistent. I think that they are lowering customer acquisition costs and increasing average revenue per user, lowering stock-based compensation, lowering it as a percentage of revenue. It just seems like they were a part of the SPAC hype. They were doing things wrong, and they're trying to correct it on every inch. So,
hey, one last thing I just want to touch on SoFi, and whoever wants to jump in, whether it's you, Amit, Tannor, whoever wants to jump in here. I don't usually care that much about short-term stock price moves, but what the hell? Like SoFi is crazy in the short term. Like it jumped massive, then sold off massive, then jumped again. Like who's playing games with the stock? Is it just attracted a lot of trader momentum, or like, can you guys, quantify that or give your opinion on why it is insanely volatile, especially the last, couple months here?
Amit, do you want, or
I'll just say personally, I was just going to say, it's a retail stock. There's a lot of people that are interested. I mean, if you go on Twitter and you type in SoFi, there's thousands and thousands of tweets every day. People really, really like this company. They see a lot of potential in it. And honestly, I think people are bag holding so much, just like Palantir from 2021, that it kind of became this self-fulfilling prophecy of, all right, let me make content. Let me learn about my bags that I'm holding to figure out, should I be DCAing more?
But why the big sell-offs then? Is that retail just all of a sudden one day they panic and next day they're excited? Because that seems like it's a lot of shares to move in and out to push it, for those sorts of prices.
Tannor, you can take that.
I think a lot of it's options too. That there's that options are amplifying the up and the downside. There's a lot of options plays on this. The options are attractively priced, and the market cap is low enough where you can get massive multiples very, very quickly. I mean, yeah. I think all of us at some point were holding multiple tiers of SoFi options going into different earnings, and then you maybe roll some of the profits into shares. So that's what I would guess it is. It's at a good enough market cap, and the stock price itself is low enough where you can bracket a lot of these a lot of the options chain.
Yeah, so
I just think institutional holding is so low right now. I think it's like still in the 30%. Because they're not profitable, because they don't have some of these funds that can add a little bit of consistency, because they don't match any of the objectives. They're not a big enough company. They're not profitable. They're not all these things. So funds aren't buying in enough. I just find it's very volatile because there's a lot of retail.
I think you're blaming the retail, but it's to me, it looked more like traders. And the reason I say that is because when the whole market's going up, SoFi gets to benefit more than the whole market because the beta is bigger on it. So when the S&P is skyrocketing, we saw SoFi go to $12. When it's going down and we're getting a pullback, SoFi goes back to six, where it sort of is stable. So I think that's what's going on. It's just momentum. And when the momentum changes, I think we're going to go back up, honestly.
Well, actually, to Vitaly's point, we were seeing that massive rotation out of growth into value and then back, and SoFi gets a benefit of a little bit of both, depending on.
And if 2024 is good and S&P does well and we're not in a big recession, I think SoFi will do well, because if more money's on the table, the rates are coming down, it'll just be an obvious thing, and I think money will rush in again. But it's traders. There's a lot of traders there.
The biggest problem with SoFi right now is that although we've seen quarter after quarter after quarter of good growth, that the biggest risk hasn't changed. It's a balance sheet risk. And that's just why banks hold lower multiples, is because if something turns and unemployment goes up and defaults follow, that regardless if you have $100 billion or freaking $10 trillion on your balance sheet, it all goes down at the same rate if defaults skyrocket. So they're still faced in that hard time, and that's not going to change whether we add 400,000 new members or 700,000.
I think one of the things about SoFi is you do have to be a little bit of a macroeconomist to understand if you invest in SoFi or not. Because some of these regionals and broader banks, they all have their own stories. But again, as Vitaly said, they're profitable, they're making money, like you can understand them. SoFi, again, is in a tough situation where it's a neobank, and if the macro turns against them, they're going to be a tough situation. But we will see what goes on with SoFi going on into the next couple months. Next topic. This is going to be a good one. I'm happy Vitaly joined for this one. Carlos, go ahead. You can interrupt.
I was going to say, before we go, just a little something lighthearted before we go and get into the heavy topic, because I wanted to ask you about this.
What is this going to be? Oh,
All
boy.
Right. So you posted this today or 2 days ago, Jeremy. You said, when the squad finds the stock trading below 15 forward PE with double-digit revenue growth and massive free cash flow. What stock is this?
We know what stock that is. We have to know what stock that is.
Well, I don't know. It could be something that starts with a P. I don't know. Could be. Might be a stock we talk about here in just a moment. I don't know if that's where you're going. I think you're going to another subject.
I'm going to a different subject. We'll leave the P one out for a little bit.
We'll leave the P for last. Okay, so let's start fighting.
I want somebody to reconvince me on the one that we're going to get to in about half an hour.
Yeah, because we got a bear right there in the top right corner. Here's the question to you, Jeremy. Let's start off with you. Okay, 630 people being here. Thank you for being here on a Sunday night. 630 people watching from your homes,
They made it through the first
from your
hour.
toilets, from your cars, wherever you are. We appreciate it so much. Jeremy, you've reacted live on your Twitch streams to Carlos and VITALY and KRIS talking about Enphase. And you know the story, I think, a little bit about the solar revolution we're having. Enphase was at 180 this year. Sorry, it was like 250.
340.
It was at 340 this year.
A year and
Now,
a half ago.
Year and a half. Yeah, I think in 2023, that top was like maybe 300. Got to 72 a couple weeks ago after bad earnings. Now popped back up 20% to 90. Why don't you own Enphase, Jeremy? It's
Oh, good
growing company.
Also, what do you
profitable.
need?
Why
What do
don't
you
you own
need
it?
to own it? That's also a question. Like,
And also,
how-
did you actually short Enphase?
I wish. No.
Oh, I forgot you made a video saying Enphase is the best stock to short, and you were right.
I'm going to
You
get
were right.
response to that part real quick. When he made that video, we made a commentary video. Sorry, Jeremy, we did. It went to 340 after he made that video, just FYI. And I end up selling and buying a fucking pool and 2 Teslas. So there is a time and a place for everything to make money, right? And there's a time and a place for some things that aren't in the popular space.
Yeah.
So you could have made a ton of fucking money if you actually did not, no offense, Jeremy, did not listen to Jeremy at that point. Listen to me. It did go up. Me and Carlos did make bank. I think Carlos even sold some shares in 270. I believe you were selling.
No, I sold. I almost hit the top, like 307.
So there you go. He almost hit the top. So the people who were smart made a lot of money.
You
And
guys
then
both did. You both did made a lot.
The
of money.
only
You did really
people who
well.
are complaining now are the people who don't know how to take profits and have to learn a little bit to take a little bit off the top and divert it into something else.
No, but you know what?
So
Vitaly, it's
anyway,
not-
I just wanted to preface that before we continue.
but it's not just that. We were buying the stock at way lower prices.
$20,
It's like
30
talking
bucks,
about Bitcoin right
50
now.
bucks.
People's risk aversion to buying Bitcoin at these levels is not the same as us buying them for $8,000 in 2020. We're always green. It's green every day. You know
I'm
what I
still
mean?
green, everybody, by the way, and
That's-
I'm
that's the
swimming
point.
in green. So there you go. Everything is fine. So there is a time and a place. So I think once again, Jeremy, sorry, but your video was off by 4 months, 5 months, maybe.
Yeah.
And timing is matter when you short something. Because at 340, it was a no-brainer. I was not buying anything. Me and Carlos were telling everybody, do not buy Enphase. We're waiting for lower numbers. So now people are bag holding and they're not happy. I think that's
So
what
let me preface this as well. So basically, VITALY and Carlos bought Enphase when it was really cheap. They still have Enphase, but they sold basically at the top. If the YouTube algorithm recommended Jeremy's short Enphase video at 340, you would have done really well. Maybe at 170, you wouldn't have done too well. Regardless, the stock's at $90, went to a low of 72. Jeremy, any thoughts ever of like maybe I should look into buying Enphase?
Okay. There's a lot we got to go over here. First, I didn't even know I made a video about shorting Enphase. Do we have this video?
No, you didn't make a
He
video.
he makes
Oh,
so
well,
many
video about
videos.
shorting
you make a
Enphase.
lot of
You
videos,
were-
but
you
you said
made
if
a
there was
video-
one stock I would short, it would be
you were
Enphase.
talking about 5 or 6 videos, 5 or 6 stocks.
5 or 6
And
stocks.
the very first stock that you mentioned was Enphase. You're like, oh, this is
Basically, you were doing a regular video and you triggered these two guys because they watch every Enphase video. on the
VITALY.
planet.
VITALY's like, get on
You're
Zoom
making a
right
regular
now.
video.
I
And
got
you're
a
making
doing a
thumbnail.
video.
I got a
It's
thumbnail. I'm gonna try to. And
Oh,
it was like,
gosh.
okay, we're doing this.
This is wild. This is wild. I didn't even know that. Amit, if you ever get a chance, send me the video because I don't even
Wait,
know the video.
send your video or
Look,
oh,
we'll
Yeah,
post it
my
and we'll
video-
post our response. No, but it's kind of harsh. But,
Yeah, because I would love to hear kind of what my thesis was at that time whenever I did it and whatnot. But in real quick here, that's why if you're ever gonna short, which is usually not a very good idea, the timing's so important. And just because it might look overvalued, you might still be off a while. Burry in his short, in the housing market, he was several years early in that back in the day.
Yeah.
And so you could be wrong, and that's why these short sellers can get just slaughtered because you go heavy short, and next thing you know, you got margin calls and whatever. So, but anyways, in regards to Enphase, I've never liked solar, never. Tesla, I've always valued Tesla's solar-related business at 0, always. If you go back and watch any of my pro Tesla videos back in, 2018, 2019, never valued solar. I've never liked the industry, never liked the business model. I've seen so many companies fail. And so Enphase has been a real winner, chicken dinner. There's no doubt their financials are phenomenal. The way they've run their business is phenomenal. They're one of the very few that's actually like legit. And what's interesting to me is I'm trying to figure out, is this a steal deal or is it is this a $50 stock we're going to here, 40, and it's a no touch for the next several years. And I'm also still trying to figure out if their technology can be replicated, copied. And that's where we get into some great debates, Carlos and Chris. And I think both you guys have great points. And that's why I've enjoyed your guys' kind of banter and debates on this, because I think you got very, very valid points, Carlos. And I also think Chris has very good debates, kind of back and forth here about the interest rate environment from the Chris side, and obviously your points. And I think you've touched on some really interesting points, Carlos, in regards to suppliers and kind of, the people that are kind of the middleman in regards to, the dealers, everybody like that. So I don't know. I'm just trying to figure out like where Enphase is really going over this next few years. And I'm not confident in at all right now. And I'm not just going to go buy a stock just because it went down a lot, because there's a lot of stocks that go down a lot and they're not coming back, right? Enphase might be one of those that maybe it goes down. Maybe it goes down a hell of a lot more. And then it's $100 stock again, or $200 stock, or $300 stock, or whatever. But I would love, you guys to speak about this one, and then maybe I can ask some questions a little later on.
Can I ask
I actually have a question for Jeremy. Well, go ahead.
Yeah.
Go ahead.
I was going to ask,
Go ahead, Matt.
when you say you're negative on solar, are you speaking specifically to residential solar, or are you talking about more commercial solar? Because you've had a lot of companies.
He hates the sun. He prefers it to be night all the time.
I do too. I'm very
Hard
pale.
vampire.
I can't go out for very long. I'm basically a vampire.
He has Exxon stock. He doesn't want to invest.
They don't like it that I work for UDOC. So every time I get on, they think I'm just a perma bear against renewables. But I'm bearish against residential solar, and I'm very bullish on commercial solar. I invest in companies like Ørsted, which is an offshore wind company. I invest in companies like NextEra Energy. I think Berkshire Hathaway Energy, which has a lot of solar in your home state of Nevada, does a really good job. So when it comes to commercial solar, I think that that's something that is going to continue to have really good returns on capital employed. Where I very much think it's very difficult is the capital outlay for the average American to come out of pocket. And this is where Carlos and VITALY can kind of correct me, because they have experience in this place where I do not. But to me, I think, almost like how we have cloud computing, it's like you have data centers for a reason, right? You don't want to store all that data and have all these massive servers in your own home. So you hire an Amazon, you hire a Microsoft. I think it's the same exact thing. You could be for solar. You think it's clean. You think, you're for the transition to net zero in terms of carbon emissions, but you don't want to take on that $20,000-$30,000 investment yourself. You'd rather just pay your monthly allotment to a commercial electricity provider. That's just my personal
The difference
thought.
is you don't feed your family and heat your home with data on hard drives. Everybody needs energy. Energy is sort of like the base level. After you have food, water, and shelter, you need energy to power your life. And so it's something that you don't think about until you don't have it, right? And so the idea of having that backup, that home backup protection, is you have that when nobody else does. Because if your house runs out of power right now, you now suddenly have to deal with that problem immediately. You can't not. It's like right now, if in the summertime your AC runs out, everything stops. It's like getting something in your eye. You now have to stop and fix that problem. And it's an insurance. It's the same reason why you have insurance, right?
Hold on, Jeremy.
That's what I was thinking. Is like you could buy a generator right now.
Let's get Jeremy's point. Are you
that's not an answer, Tannor? That's a very
hold on. Jeremy, are you bearish on residential, commercial, or solar writ large? I guess is the question.
So I'm bearish on solar companies.
Just in general.
Just in general.
Okay.
Usually most of them just suck. And so you got to try to find the hidden gem in that bunch. And I don't think there's many true, real hidden gems for long term. But the one thing I think Matt brought a valid point on is, I think you could have different perspectives on residential versus commercial or even electric companies using solar, because here in Vegas, you go to the outskirts, in every direction, solar panels for days, and they're just building more and more and more. And so I look at it and I'm like, why would I need a solar panel on my roof if all the big energy companies are going to get them over time, and maybe that can cut cost or save cost or whatever. And if you live in LA, you can't just put solar panels everywhere, right? It's not even like feasible. That can't happen. So you kind of need it on your house. So I think even if you live in different states, different cities, you might have different perspectives. But anyways, I'm still trying to figure it all out, and that's why I'm
so
interested.
At the end of the
I got
day,
a question. Hold on. Let me just ask Jeremy a question. All right. So solar right now penetration we know is roughly 5% in the United States, maybe 4%, whatever, 4 or 5. Do you believe there's a world in the next 10 years that solar is 30% penetration, 40%? Like where do you think this is going, just in your opinion? And if that's the case, then I have a follow-up, but what's going to happen with solar? Is this like a fad that we've hit 5%, we've hit the peak, or we're going higher?
I think we're probably going higher, but how high we go, and does that mean everybody's got solar panels of their own on their roof, or does that mean it's the energy companies that all have the solar and they're generating? That's where I'm like, I don't know.
So
exactly
let me follow that up. I'll just guide you in at least my thinking. Next step. Okay, so you believe solar is going higher. Okay,
Yeah.
maybe 30%, maybe 40. Who knows? Maybe higher, but let's say over 30%. All right. So there's still some sort of alpha to be made if that is happening, right? Now let's talk about the next step. Your bear case, who knows if it's all commercial and this goes to Matt money and it's not residential. Let's talk about that. Right now, my rates, forget about everybody else, and we can talk about everybody else. My rates went up 22% this year for electricity because JCP&L decided in New Jersey that we're going to charge you more money. And whatever they're paying off in the government regulation, I didn't get a say in how much it went up. I didn't get to say that, oh, it's going to be 22% or 25% or 15 or 5 or the rate of inflation, whatever it was. I had no say in that, right? And that kind of stuff is going to keep happening for the next 1,000 years of these energy companies. So as long as that incentive to keep raising rates and not lowering them, because I've never seen my energy go down. I've never seen that once. So process that. Every couple of years, it goes up 5, 10, 15, 20% in terms of energy. Don't you think that will lead to more people wanting to control their energy as they see, especially if they're transitioning to EVs? And I know you believe in EVs with Tesla. So don't you see that will directly benefit solar? Forget about the companies for now for a second, but in that respect. And this goes to residential energy, by the way. That's why I'm bullish on that.
Yeah, and I think certainly at least a little bit. Once again, the numbers, I don't know, but I'll agree with that.
Okay, so let's say that is happening. The next step is how many companies are in control of the things? I know you're saying solar company, but Enphase is more of a chip manufacturer, more of an energy provider than it's not a solar panel maker. So that's a commodity. I think you're right. And maybe microinverters in 10 years will be a commodity too. But right now, there's literally 2 companies who own 90% of the space. I'm not sure if you're aware of this fact, but it's SolarEdge and Enphase. So that can go away in a decade. I'm not arguing that, but it's not going away tomorrow. That's the thing. Mm-hmm. So if solar is increasing during the next decade, and we have 90% market that is controlled by basically a duopoly at this point, Tesla's not even in this yet. Maybe they come in at some point, but let's say 3 companies control it. Where does a company like that go for the next 5, 10 years while everybody else figures out how to copy them?
Yeah, well, and that's another component that I still need to figure out is what makes their technology so special that some Chinese company can't copy.
I think Carlos should answer that. It's not their technology. I mean, yes, microinverters are important. They have patents, but I think Carlos mentioned it on multiple podcasts. They have a network of installers. They control this network that why would you switch as an installer? Because that's the guy who has to deal with all of these problems that come up in your house. Because you're installing like an A.O. Smith boiler. Have you ever installed that in your house? Like, what is your water heater? Do you know?
Jeremy's too rich to install that shit.
No, I don't mean personally. Did you ever take a look at your boiler?
No, I have not.
There's like main providers of those things.
Jeremy's like, I haven't cooked in a decade, Vitaly.
I don't even know where my boiler is in my house.
My point is, okay, so I have
He's got people for that.
Listen to this point. I have a bunch of residential properties, and the boiler I pretty much install is A.O. Smith, the water heater, basically. And the reason I do that is because they're the one with the better warranty. They're known to last longer. I'm just going to go with the standard. I'm not trying to go outside of that and figure out the next best boiler. Do you know what I mean? Like, that's a waste of my time to save $200 to figure out the next best boiler because I don't need a spill in my house. So this product is for 30 years in your house.
Yeah. So this is a good point. It reminds me, when I grew up as a kid, I always worked with my dad. He had a little pool cleaning business and repair. And we would actually put A.O. Smith motors and pumps on pools, when I was a kid and whatnot. And yeah, my dad never went outside A.O. Smith. He just always used A.O. Smith because that was, what was reputable. And that's what he could get from his supplier, Superior Pool Products and whatnot. So yeah, it's a very valid point.
But using your dad as an example, if somebody came in and undercut and said, I can get you the same pool pump for $10 less. Well, now your dad has to figure out, are there any specific nuances to the installation of this? Now, some of the existing parts that I have that make it easy to service, all of the pools that I have, maybe I have to now keep separate parts on hand to be able to install this. Or if I call this company, I'm on site with a problem, do they have this customer service team to get me in and out of there as quickly as possible? The price point of the individual items you install is not as much of a factor for those installers as the overall, as their experience in dealing with the customers, because they're trying to run a business. And essentially, and I used to work in a low voltage business. I used to do a home installations of alarms and camera systems. The companies that I worked for still install the same alarms, the same exact alarm panels that we used to install in 2000. Why? Because now they have hundreds of thousands of them out there, and they can basically, you train someone on your system today and they can go back and service any one of the last 20-year customers that you have, because now they understand that system. That makes
okay.
it
So why does
really
that mean buy the stock? That's the question. Stock's down a lot this year.
Well, hold on. Before you get there, I want to point out how important this is, that if you have a business as a small installer and some guy comes to you and says, hey, install our product, we'll give you incentives to do that, blah, blah, blah. But are you going to then service that product for the next 15, 20 years? Like, meaning, are you going to pay me to go service that product that you are pitching me, like Hoy Miles or some other third-party Chinese manufacturer? Are you going to pay me to do that? Because I don't want to see this customer again as an installer. I don't want to see this customer unless I'm upselling him like a charger or doing something else to his house. So you gotta think of the incentives in anything, right? The incentives for the installer is never to see you again unless you're upselling something. So there's no reason for them to switch, especially if something is working and Enphase is replacing it in one day. They'll send you a part. You don't even got to send it to them. They'll pick up your call in a minute. There's all these little things around this ecosystem that is not so easy to just replicate because I have a microinverter. So
they also cover the cost of the service. Like Enphase covers.
They cover, they pay the guy, but it happens so frequently, it doesn't even matter. And to Matt Money's point, is like, oh, people with a lot of money, people who have energy would rather pay NEE or some other big guy to do their energy for them. No, if someone told me, get rid of your electric bill and explained it to me, like if I'm an idiot, but they explained all the math, okay? Get rid of your energy bill, you pay the same price. 10 years from now, you have no energy bill. That's what happens here. And this is what I went through with Carlos. We have no energy bill. You guys keep glossing over that like it's not important. It is important. Okay, so the fact that you will have no energy bill in 10 years is a very important thing if you plan to live in your house, of course. So as long as that is the case, and there's lots of people who live in their houses for over 10 years, they will figure it out one day that it is important. And your Matt Money, your bear case goes away completely, because nobody wants to pay the fucking JCPL, Con Edison, and all these assholes. We all hate them.
Well, also,
nobody wants to pay them, but
I think
that's right. Kick them off the pot.
Some men aren't looking for anything logical like money. They can't be bought, bullied, reasoned, or negotiated. Some men just want to watch the world burn.
I am here. Finally. I couldn't stop. I had to come and take over, man. All you guys, all of you bulls, bring me on, Amit. Let's do this.
KRIS Patel is joined right when we needed him to
Did KRIS
join.
Patel just hack the stream?
He just hacked us and
What
kicked
just
everybody
happened?
out.
I was like, what is Amit doing?
KRIS
I was like, did you go to commercial?
First of all, Alexa, activate studio mode.
Oh boy.
Everyone at home is gonna their Alexa's freaking out.
All right. All right. First and foremost, I'm going to start with you, Tannor, because you've been spewing this SoFi bullshit for the last year and a half, and I think it needs to be corrected ASAP. Okay. First and foremost, SoFi is just a goddamn bank. Granted, they don't have any physical locations. Granted, they don't have any physical location they go to, and they don't have any upkeep to maintain those things. But at the end of the day, they're still just a shitty bank. All right.
A fast growing one.
Maybe they changed their business model around, but right now that's not the case. So just chillax. Okay. Maybe Noto can pull money out of thin air and, get gap profitability here and there, a few dollars. But at the end of the day, Jeremy was absolutely right. look at the valuations on the banks. They're like 5 PE, 6 PE, 7 PE. And those are companies that make billions of dollars, not a few $100 million in GAAP profitability that they're looking at with fourth quarter. So
You know
whatever
that
on,
doesn't
King.
matter. You know that doesn't matter.
whatever over optimism you have with SoFi, just chill out. Let them actually show that they can make more money and they can make it consistently over a long period of time, and then effectively compete against the JP Morgans of the world. All right.
Let 'em
And
cook.
Hold on now. Now do your next 2 minutes on Palantir, then you can go to Enphase. Go ahead.
All right. Next, you Palantir bulls. God, man. Just valuation. It's like you guys are going to Kroger and be like, let me buy the most expensive thing you guys have. Bro, it's Kroger. Chill out. Right now is not the time to go grocery shopping and trying to find the most expensive thing at Kroger. All right. Just woosah. All right.
Let 'em cook.
$20 is too expensive. All right. Right now, especially you, Matt Money, you're like, oh my God, this is a great product. Great product. Well, congratulations. You made a few cents per share, a few cents. So once again, y'all are going shopping at Kroger looking for the most expensive thing. Palantir is literally just at the bargain bin right now. So not at the bargain bin. Sorry, it's the most expensive thing at Kroger. Enphase, bro.
All right, I'll bring
Solar.
everyone here for the Enphase because this is what we were in the middle of. So
Solar,
I'll
come
go
on.
regular. Go ahead. What's the Enphase there?
bro,
Chris? What do we
I
got?
cannot be in more agreement with Jeremy when it comes to solar has never really made money and has never made it consistently. Yeah, you have a couple of years where energy prices are through the roof and you have low interest rates at the same time and you get this giant jump in demand. But for the most part, no one is like, yeah, you know what? I think I don't want to pay an extra $30 a month. Let me go put on a $40,000 electronic fucking sunroof that's like a giant lightning attraction thing
Did you
right
just
up
call it a
there.
sunroof?
And
Oh my God.
and on top of
He
it,
thinks 5G causes cancer too. Watch.
and if you think
And
about
windmills.
it, you are also going to be raising your home insurance. By the way, I don't know if you guys are talking
That's
about
not
that.
true. That is not true.
Go to
I have
Florida,
home
go to-
insurance. That did not happen.
Go to Florida. Go to
Let
Florida.
Chris get his couple minutes, and then we're gonna attack. Chris, get your
Go,
couple
go to
minutes.
Florida.
You got to answer the incorrect things as they come along. You can't
No,
wait 5
so
minutes.
take notes.
No,
I'm
let
gonna
him,
give you
let
time.
him, let him finish. Let him
Yeah,
finish.
let him cook.
Go to Florida, go to other places around the country, ask any person there. They're saying, oh, you want to get solar? We're not going to insure your roof. All right. And if you don't believe that, just type in Florida, no coverage roof. That's it. It just takes 2 seconds. Maybe in your state, you've got insurance companies that are not worried about this thing, but there's a lot of states where they get abundance of solar, but at the same time, they're not exactly the solar install. I mean, the insurers are not willing to put that on. So like I said, it take 2 seconds, look it up. And Florida is a huge market. California is huge market. The other thing with California is cutting back on all the incentive programs that they were all aboard with for the last 5 years. All those rollbacks, they're going to cost consumers money. So whatever value
You're talking about
proposition.
NEM 3.0.
Yeah, exactly. So whatever value proposition was there is no longer there. And then on top of it, bro, China's coming. All right. No, if you don't want to believe it, don't believe it. But
They were here on Wednesday. They were here at California. They were
Yeah.
here.
China was here.
And whatever tariffs that might have gone on in the past with manufacturing, I'm sure Xi Jinping said, hey, listen, let my solar people in the door. Otherwise, we're not going to let you in our market. So you just have a lot of things going not so good with solar. Are there any
a lot of
companies that left
misinformation
out?
today, Chris?
Did I
Wow.
leave out any companies?
Holy schmoly.
PayPal, is that the one we left out?
Yeah, we're not
We
even
haven't
there
gone
yet.
on yet.
We haven't talked about PayPal yet, but
All
Okay,
right.
let's finish Enphase, and then we'll go to PayPal. We'll do,
real quick, and I'm
Wait,
sure
can I just say
Vitaly-
one thing? He just said you said we could comment after.
Go ahead.
Oh yeah,
Tanner,
right.
go
So
ahead.
you hit SoFi.
Really quick, just one question for Chris. It's just a
Mhm.
bank. Why do you
Yeah.
like New Bank so much?
Because it
Why
is
does he
a
like
bank
TFT?
in an area that doesn't have a lot of banks. SoFi's trying to go into the widest market possible, which is the United States, where there's like 40,000 banks. In South America, there's like 3 banks or 4 banks per country. So yeah, New Bank can go into a market and dominate the market because it's all archaic old banks. SoFi is going up against the most well-capitalized banks that have hundreds of years of history in the United States. If you want to go up against them, go for it. If you think $1 billion acquisition of Galileo, you don't think JB Diamond was like, you know what? I need to buy Galileo, or I need to buy a payment processor. By the way, there's like 20 fucking payment processors. I don't know why Galileo seems like this, oh my God thing. It's not. All right. I don't even know how much money it really makes. So
but what separates Jamie Dimon JP Morgan versus Banco
$2
do
trillion.
Brasil or something?
$2 trillion in assets.
why-
That's what differentiates.
No,
them.
listen. Why do you think that the banks in Brazil are archaic, but the banks in North America are smart and know that neobanking is going nowhere, and that's why they haven't invested heavily?
Just think about the logic that you're using right now. You're talking about a country that only has 3 or 4 banks versus the United States, which has 40,000 goddamn banks. All right, just from a competition standpoint, just tell me.
Who is SoFi stealing customers from then?
Yeah,
exactly. That's the point. That yes, there are people. And this is the other example that I've seen by so many people. So many people sign up for a SoFi, but then they're just like, bro, this is shitty. I'm not going to use it anymore and get off of it. But they still track it as, oh, look, we still have members. We have 40,000 members or 50,000 members.
Wait. Well, have
they ever broken out?
You could be right about
no,
it.
Hold on.
SoFi
Have they ever broken out the numbers on how many active users they have versus how many they actually have total? Because all I see is, oh, they have total this many.
They have not.
Yeah,
they have not.
Tell me how many active you got.
Yeah, but what about when Jamie Dimon was he had to appear in front of Congress and answer for the fact that they were falsely creating accounts for customers that didn't ask them. Do you remember that?
Yeah,
I think it was Wells Fargo and
Wells Fargo. Yeah, so they were out falsely creating, and they were literally just making new accounts.
Right. But
growth,
once again, Carlos, that's one bank out of 40,000 here in the U.S. Like, just think about that. Like, yes, maybe there's 1 or 2 banks that do some nefarious shit. That doesn't mean the other 39,000 are not doing the right thing and going to
guys. I don't think this is going 100 billion anymore.
But real quick,
real quick,
I'm just trying to play devil's advocate. But real quick,
15 banks own 50% of the market. So you can say 40,000, but we're really competing against about 15 big players. Like, that's really what it is.
And based on what you're saying, right? We already had E-Trade, we had a bunch of other stock brokerages, and Robinhood comes out of nowhere, and they've been growing as well. So it's like to say
and
that
they're trading at book value. What does that tell you? What does that tell you?
But you're making it seem like there's no market for them to grow, because based on what you're saying, we already have E-Trade. Why do you need Robinhood, right?
No, what I'm trying to say is you're essentially competing away profits. All right. The point is not that you can't compete. It's just that as a shareholder, you typically don't want to be in companies that have so many competitors that most of their profits are competed away. You want to get.
All right, let Tannor respond a little bit, then we'll go to Enphase. Go ahead, Tannor. Real quick.
But I would just say, though, it's not that we're getting it, comparing apples to apples. The multiple on new, and I own both. They're my 2 biggest fintech holdings, but the multiple on new is also priced much higher because of their growth rates versus SoFi. So if it's based on multiples and they are trading near book value and continuing to grow 30, 40%, okay, stay at book value. They're still going to grow at 30, 40%,
Yeah,
I made Jeremy rage quit.
We'll see.
All right, he's gonna be back. All right, so Enphase. I think Matt, you were gonna say something right before I did Chris's Darth Vader thing, because Vitaly said your bear case is bad. What were you gonna say?
I don't remember. Maybe
well, it was the residential thing, my point, just to summarize it, because we went to commercial break, was that if someone said just replace your bill, okay, maybe not in this right environment, but next year the rates are down. Someone says you're paying $200, not $30 more, by the way. Mine was raised a lot, 22%, and my bills are expensive. My actual electrical bill is over $500 if I don't have solar, just FYI. So if you're trying to heat and do other things with your house, it gets expensive. So my point is, if someone says here, I'll give you a 1-for-1, you pay it off within 7 to 10 years. That's what it is. It's a 1-for-1. And in 10 years, you're living in a house anyway. If they actually convince you of the math, then it makes financial sense. A lot of people, the problem with my bear case is a lot of people don't understand the math. Okay. When people try to explain it. But in terms of your bear case, in terms of trying to use the grid, I choose not to use the grid because I don't want to pay these con artists who keep stealing money from me every couple of years by raising it 20, 30%. So anyway, respond to that point.
No, for sure. I mean, let me ask a question for you. I mean, what was your calculation in terms of payback?
Okay, so there's 2 things. I'm actually upgrading my system right now. Day 1, when I got it in 2018, who knew inflation would go crazy? I didn't know that, right? But what ended up happening is that my payback was 4 years, 5 years, approximately, when I first got the system, and it covered everything in my house. Literally 1-for-1 bill, even better. But let me explain the why better. 1-for-1 bill being covered, meaning the electrical that I produce will be exactly offset in terms of the cost. Okay. So, and when I feed back into the grid in the summer months, in the winter, I get to draw from it. So I never had an electric bill, $0. Does that make sense? But it gets better. There's around 13 states that give you an actual incentive. Lots of states give it to you, but it's something called an SREC or a TREC. So instead of just breaking even, I was actually paid $200 to $400 every single month. This is what you guys don't all consider. You don't know all the things that are going on with all this IRA and the incentive structure. So what happened was my break even was immediate. I never put down $1. I was getting paid every month $200 to $400 in profit. Okay, so making around $3,000 a year, spending nothing on solar.
You're still paid.
Hold on.
Still.
Spending nothing on solar at all. Does that make sense? Now it's different because now it's 10%. I don't know what you're laughing at, Chris. You must be drunk, but. Now it's 10, 11%.
You're saying you still had to have a capital outlay, right?
There's no capital outlay.
Look,
You're not listening to me. You're really not listening. There was no
VITALY throws shade
outlay.
whenever you don't agree with him.
Yeah. He's laughing, but there is no capital outlay because the way the solar companies work.
Hold
on.
You still get a bill. No, I'm just saying you still get a bill. You still have to pay for the solar. Yeah, maybe you don't pay the electricity like electrical grid, but you still get a monthly bill, right?
Well, hold on.
So,
wait. I just want to speak to
you
that.
keep missing the point that in certain states, especially mine, especially why I decided mathematically to go solar. There's 13 states that pay you money to have solar. Because the polluters have to pay you.
I get it. Yeah.
So what happens is they have to pay me for every megawatt around $200, $220 a month. I produce sometimes 2 megawatts or 3 megawatts. It depends on the month, of course. So it works out where I get around 20 of these certificates. Then that offsets completely any loan that you're talking about, Chris. I paid $0. I never put a down payment. I never had a deposit because the way these loans work with these solar companies is they do everything. They bill you a year later. You don't have to pay anything, okay? But nobody wants to talk about actual math. You just want to keep talking about rates. So I'm going to go to that right now. There's a second part to this. That was the first part, 2018. Who knew my bills would go up in terms of electrical 22%, 30%? It kept going up. Who knew that would happen? Who knew I'd buy 2 Teslas, etc.? So I'm paying electricity again. And they're raising the rates. That's where I had to do serious actual math to figure out, is it worth it for me now to upgrade even further and put a ground mount system in my backyard? And it still is. The payback is 13% compounded in cash, by the way, 13% better than the stock market. I'm paying $78,000. I will never have electric bill again. And it's 13% return. And Matt Money, me and you could do a whole podcast. I'll go through all the numbers with you. I get a 13% return for laying out that $70,000. And my math was like, you know what? That's actually better than a lot of investments I have. I will lay out that $70,000.
VITALY, I don't disagree with your math, and I know you're a very intelligent guy. Where I think we differ is not many people will have $70,000 to lay out.
Okay, but I want to speak to that. Wait, hold on. I want to speak to that because I think we're looking at this the wrong way. Let's make a metaphor.
Jeremy agrees with that too.
I want to make a metaphor.
70 grand.
I want to make a metaphor, and I'll speak to what you're talking about too, Jeremy.
By the way, that's my system in my house. That's not everybody.
Yeah. But even still, let's just say somebody has half your house. It's still 35.
No, you're missing the point. I have 2 Teslas that I want to charge for free. That's a 75 kilowatt hour battery, dude. I'm going to charge it for free forever. Any electric car, I will never pay gas. I don't have a gas bill. I think you're missing all of these ancillary.
I'm not missing it. You're very well off. That's the thing. You had the capital to outlay.
Okay, but again, I just need to make this point because we're missing. We're just not looking at this fundamentally the right way. The way to look at solar is the same as buying a rental property that you get to buy with no money down. If you buy a rental property with no money down, your renters, which is the free solar that's coming there, is paying for its own bill every month. And then at a certain point, when that property is paid off, all of the money that you're making every month is free in your pocket, and you get the appreciation. So you're not just blowing $70,000. My system was $26,000. Well, what do you think my house appreciated as a result of having that on the house? I had my house recently reappraised. The money that I added to the money that I paid for the system now goes right onto the bottom line when I turn around and go sell the house. So I don't lose the money. I'm actually gaining that money. And who's paying the $26,000 back that I paid for my system? I didn't put any money down on the solar system. And my electric and the bill for the loan was cheaper than any one of my monthly bills was for electricity. So I was paying less per month out of pocket than I was paying energy at whatever the market rate was. in addition to be able to use the energy. And I was getting paid for the overages. It was going into a bank. So in the wintertime, when I didn't make as much money, I was able to draw from that as my credits. And basically I had zero energy bill, but I was paying back a loan on equipment. The loan was being paid for by energy that was created from the same solar panels. And after 4 or 5 years, when it's paid off, I literally don't pay a bill, and I'm not paying a bill. Now, when I go and sell this house, that $26,000, I am going to bill that to the person that goes and buys this house. So this idea that you have to shell out all this money and where you pay, you're not actually paying for the money. The person that buys your home after you will pay for that system.
I know you don't have to think about that though.
You get the system paid for twice. Once it's paid for while you're using it, the second time it's paid for when you sell the home. And in the meantime, you're using all
Carlos, I think you're right about the resale value does go up somewhat, especially as the future goes on and people want these things in their house. Because if you have an EV and you come to my house or your house, oh, I have an EV too, and you have solar. Oh, I don't have to pay for gas forever. That's amazing. So some people do get this, Matt. My bear case is always people are stupid. That's my bear case, that they don't know how to do math over 7 years or 10 years. So if they can't figure that out,
with that as well.
Yeah,
that's basically what Sanjeev said. He
that
said
is the major bear case.
Overestimating the wealth and intelligence of the average American.
Yes, I agree. In fact, I've talked to my neighbors too, and a lot of them want, like you, they're saying the same dumb things. No offense, Matt. They're saying the same stupid things to me. I'm saying you can get free energy right now. They will pay you to have solar on your roof. There's an SREC program. Hold on, a TREC program. Hold on. There's an SREC program. They will pay you money every month. You forget about the bill. There is no bill for you, dude. Oh, the price tag is 45,000 or 30,000 or whatever. Oh my God, that price tag. They see the price tag. They don't do the math, the whole math, and they can't figure it out. So that is my bear case on why solar is having a hard time. Not your bear case. Your bear case is completely wrong and should be shot in the fucking head because it's totally off kilter.
Y'all also live in states that have a lot of support for solar. All right. And by the way, California's withdrawing a lot of support. Same thing with Texas and
they're
Florida.
Not withdrawing support.
No, because the
info is so bad, it's crazy.
Hold on. The NEM 3.0 thing in California is really just to incentivize people to get batteries. It's not. It's basically saying you're not going to make as much money when you sell the energy back to the grid. So it's incentivizing people to put batteries so it doesn't overload it doesn't overload the grid. So it's not.
I swear,
I'm glad I was grandfathered into NEM 2.0 because I could get a battery and make even more. But as with anything, the earlier you are, if you're the earlier adopter, you should be incentivized. I should be incentivized because I bought it at a time when it wasn't as heavily promoted. I should get a bit more.
I feel like you guys are so product biased. Like you have such a great experience that you think everyone should have this great experience, and I'm not sure that qualifies as a good way to do the investing, right?
I'll tell you this: I don't know anyone, and I know 4 other people.
Real quick. We got 5 minutes left on Enphase, then we're going to PayPal. 5 minutes.
I know 4 people. I know 4 people that bought Teslas after. Right, I bought Teslas after I say 2020, and all of them got solar. Not a single one of them regrets buying the solar. I've never met anyone that's regretted buying.
Okay,
solar.
on top of it, how many went with Enphase? How many went with Enphase?
40%. It's the freaking stats, dude.
No. I personally have never sold. I've never sold an Enphase system because those purchases were from people that bought Teslas, and they were like, "Well, I just want to keep."
Because there's competition in the solar space. There you go. Yes, maybe I take your word for it. You guys
Can you
are
just stick to the rates? Can you stick to the rates thing? Because that's the only thing you got right.
But let's do that.
Everyone's going to get solar.
But to your point, because what I'm trying to say is that the bull case for solar is exactly the same bull case as it is for EVs. What you're trying to say is the cost of gasoline fluctuates based on oil prices, and we're basically it's a matter of national security. If these electrons are raining down from the sky, if instead of electrons it was bitcoins raining down from the sky, everyone would have the biggest net that they could to capture as much of them as possible. But they don't see that these electrons raining from the sky is actually money. Energy is what we fight wars over.
I'm not debating against the use of solar, right?
Well, you were saying no, I'm not saying you. I'm just saying KRIS in general saying that like solar is dead and that it's not going anywhere. I mean, what other business or industry that we invested in? Other companies we've talked about, say Sofi, or we'll talk about PayPal, or we talk about Palantir, have this many government incentives across the entire world pushing people to get this thing, to adopt this thing. How many of the other companies that we've talked about today have supporting businesses like EV adoption, which is happening at a record pace right now, that is also lifting that industry? So yes, right now, We had terrible guidance, but understand something too. You know, Tesla's factory was shut down for 2 weeks in China. They lost 100,000 vehicles, and then they got hammered next quarter because they didn't produce enough vehicles. Well, we guided for it. This quarter, they said, hey, we're going to close our factories down for 2 weeks to install some new tooling, and they didn't hit their production numbers, and they got hammered for it. Battery told us last time, hey, we overproduced. We have an overproduction, have a surplus in places like Germany, and also we are being affected by macroeconomic forces like rates, and so we're seeing less demand. They're seeing less demand, but there's two ways of looking at demand. Demand is like the current demand for the products, but the demand for solar itself is there. It's just being pent up in the same way that we talked about rates affecting companies being able to spend the money on Palantir software. We're not saying that nobody wants to buy it. The environment's got to be right. And what I'm saying is you're buying at these levels. As soon as the rate environment becomes more favorable to commercial and residential customers to buy the stuff, you're going to see the installs. You're going to see the installs shoot through the roof.
And I don't necessarily agree with that, just because I think everyone's used to what we've been experiencing with the zero interest rate policy since 2010. And I don't personally think that we're going to get back down to 3% rates like we were before.
I don't think, but then you're saying no one's going to buy cars anymore either?
I'm not saying that.
That was artificially.
It's
That was
going
an
to be more
artificially
cost.
low.
It's going to be definitely a cost implication associated with it.
And remember this: at those artificially low interest rates, people were paying record high prices for cars. People were paying $75,000, $80,000 for a freaking Model Y just because the rate was 2%. How smart is that? That's actually
that's been going on since 2010, though. I mean, that's not
Matt Money. I got an easy question for you. Do you believe that batteries and solar products are going to on a cost curve down?
Yes.
Okay, let me ask you.
This is the thing. Like you keep thinking that I'm against solar. I'm not against solar.
Okay, no, but I'm asking you: is energy from the grid on the cost curve down as they raise everybody's rates? Is that on a same cost curve down?
No.
It's like a rent versus mortgage.
So I mean, like, I don't understand. Do you rent everything that you own? Or that you buy? Do you rent everything? Do you lease everything? Or do you actually buy something?
See, this is where I think that you are thinking about how your experience and you are not the typical individual, right? And I love you, VITALY, and I think you do a great job explaining a lot of things. But I think that you're putting your biases and your experiences first when the majority of the world, you're facing this from a very top 10% of the United States income sort of earner versus the rest of the world, which if you were to consider yourself, you're probably in the 0.5%.
I think we should move on.
No, hold on. No, I think
I'll give you the last.
This is becoming another Enphase.
The last thing about
hold on. He talked to me. Hold on, Carlos. Hold on a second. He's talking about me in terms of, okay, you're a higher earner, so you get. But don't forget, that's why I have a bigger house and 2 Teslas and a pool I have to heat with solar. The person who has a smaller house, okay, does not need to get 2 cars and a heat pump and his pool heated.
They may not even have the house to be able to put solar on.
Well, okay. Well, I'm assuming. First of all, let's have an assumption. If you're buying solar, you're probably going to have a house. You don't live in an apartment. Let's just.
That's what I'm saying. I mean, you're generalizing the entirety of the United States to say that they own a house.
The world.
That they're as well off as you. That they can install solar.
No,
most people. There's people in this chat here that live in an apartment.
You're right. The apartment people, I'm sorry. You're not going to put solar on your window. That's not going to happen. Okay. But having said that, the people who do own a house, there's 80 million single family homes, not counting all of the commercial and other dual residential that can put solar. Forget about it. 80 million homes here. Only 5% of those have it. And what about the rest of the world? This is not a company that only operates here. This is the whole rest of the world. This is a big market to penetrate.
Jeremy, you're the top 1%. Would you buy solar?
He's not buying solar.
Okay, if I jump in here, I got a few points to add. Okay.
Oh yeah, let's add it.
Okay. A few points.
Before he goes, can you just share what I'm saying? Because this directly addresses Matt Money's point. Okay, there's something called critical mass. Whenever a new technology is being adopted, typically it's somewhere between 5 and, depending on the industry, 5 and 20%. Which means that once you reach 15, now it's saying 15 to 20%. Once you reach the 15 to 20% adoption of EVs, of solar, which was like we saw cell phones, right? We saw all this stuff, or touch phones like the iPhone. Once you reach that, the critical mass means it will continue to expand on its own and eventually, reach 90, 100%. So right now we're at about 5%. So basically the solar market, we need to triple, and then that's it. From that point on, at 5%. Once you get to 15 to 20%, it has a runaway effect, and then it will just eventually be adopted. Just
Can I add one last
regardless
thing?
of the
And I'm
agenda.
really curious.
That's all I wanted to say. And then
No, I hear you 100%. The amount of inefficiencies by putting it on an individual's roof versus creating solar farms where you're able to have 250 megawatts or sometimes up to a gigawatt of one particular facility is just astronomical. You're going to have so much inefficiencies by putting it on a roof comparatively to going out to, like Jeremy mentioned earlier, these large solar farms out in the middle of Nevada where Berkshire Hathaway Energy is doing their work, and a lot of other folks like NextEra are doing their work, maybe not in Nevada, but on the Florida side. To me, that is more useful than putting on an individual roof.
I agree with you, Matt, but the question is, don't you think there'll be a combination of both?
Yeah, I'm not disagreeing with that,
Okay.
but I'm saying that's the majority of which it should be done by commercial.
All right, well, let Jeremy speak. We're monopolizing this.
So first off, this is why I wanted Chris here. I knew it was going to get hot and heated when Chris was on here. So, okay. So a few things in regards to Enphase, and I did see somebody in the chat also brought this up. But solar confusion, right? And Vitaly, you talk about this and that. The average consumer, it's hard to explain it all to them and how they can benefit. And so I think that's something that is going to weigh on demand over time, right? The second thing is, I have two friends I've spoke to in regards to solar, probably in the past 4 or 5 months. Okay. I'll tell you one story. Graham Steffen, my neighbor, right? He told me that he spoke to a guy solar and he could get him the best price possible. Maybe he could promote for him, whatever. He said in order to get the ROI on that, it would take him about 6 years. And, Graham works through numbers more than I know anybody. So he would have to live in his house for about 6 years. And I asked him, okay, do you think you would be able to get any sort of kickback when you sold it? He said, absolutely not. That was his opinion as somebody that's been in the real estate industry for 100 years and whatnot. He thinks you're not going to get any ROI when you go to sell your house. That's his opinion. Okay. So I just think that's worth saying. And if you guys want to jump in just a moment.
It is, but the 6-year payback, if you plan to live over 6 years, it seems like a no-brainer.
Yeah, if you live in the house for 6 years, and that's a debate as well, right? And that's him getting a smoking deal. Like I could tell you, no one else is getting that deal. And so for other people, it might be 8 or 10 years. But and then the last thing I just want to add, because Robinhood got brought up, and this is in regards to SoFi, real quick. Robinhood growth back in the day, I think we always should remember, they were growing because they had the zero commission trading. Once that shifted and everybody had that changed Robinhood forever into the worst, because they had a fundamental leverage. And so in regards to SoFi, is SoFi ever, do they have something that gives them a huge leverage over the other guys? And the other thing is Robinhood in regards to valuation, because it did get brought up, they've had a massive shrinking business for 2 years now. They had 23 million, users, and now I think they're down to 10 million monthly active users. So they've been cut in half. So that might be why their valuation in the crapper. But anyways, in regards to SoFi or Enphase or SoFi, wherever you guys want to attack, I just want to make those points real quick.
I'd love to tackle that, but other people can answer the Enphase question first if we want to stick on that, and then I'll
No, we got to move on. I mean,
I think we got to move on to
Vitaly,
the one that starts with a P.
Yeah, are we ready to move on? Are we good
we
on
have to
Enphase?
do a hard cut directly at 2 hours if the conversation is going well?
We can stay till 3. I'm good for the next hour if you guys are, but
it doesn't have to be another hour. But I mean, if it goes 10 minutes over, is that a
we're at 642 people? Damn, that's
right,
crazy.
Amit, go ahead.
The one I was talking.
Okay,
let's start PayPal. Let's transition.
Let's start PayPal. We got to do that. Even if we do,
we get to 1,000 guys, we're going 24 hours, right? That's the rule.
That's the rule. All right, so Jeremy, you've been yelling on your YouTube channel and your second one and your third one, guys, PayPal. But the stock's not moving, Jeremy. It's like a rock. When you touch it, it's just stuck there. So how long are you going to keep yelling about this thing that's not a PAL by any sense of the imagination to keep buying it? Do you think it is the best opportunity in the market right now?
Yeah, I think the risk reward is tremendous right now in this market. If you look out there, obviously a lot of tech stocks their valuations have increased dramatically this year, right? When I see PayPal, I don't think it's a very controversial stock. I think there's a lot of controversial points. We spoke about SoFi, Enphase. I think those are super controversial stocks. I look at a stock like PayPal and I'm like, and I love to hear if anybody's got some bear cases around PayPal. I don't think there's a lot there. PayPal, Venmo, obviously two of the top 3 most popular finance apps in the United States, right? PayPal, huge worldwide. Like if you look at the top finance apps out there on a daily basis, iOS, like PayPal's always, almost in every developed market, is usually top 3. And so it's got scale, and that's one of the hardest things to really get is scale in this business, right? PayPal seems to just be everywhere now. Like it's amazing to me how many things I'll check out, and PayPal's an option now at this point in time. And it seems like they've really pushed over this past year to make sure they're an option. And it's just so seamless, so easy, scans your face, boom, it's through. I don't have to worry about going to get my credit card or whatnot. And then you think about the Braintree side of their business and how many big companies and maybe mid-sized companies are using Braintree and might continue to adopt Braintree, as that's a platform where you can not only pay with PayPal, but Venmo, Apple Pay, Google Pay, Visa, MasterCard, Amex. You got to have everybody as an option because a lot of people like to pay different ways nowadays, right? And so there's competition in the market. That's nothing new. There's been competition in that market. Apple Pay's been out there for about a decade now, and there's going to continue to be competition. That's the name of the game. Trading at about a 12 forward P, might even be down to a 10 forward P, somewhere in there. Let's call it a 10 to 12 range, when I think they should be ultimately trading somewhere closer to a Visa, which Visa usually trades at a forward P in the kind of the 25-ish to 30 times forward P usually for Visa. So I just think it's a tremendously undervalued asset. And I think they're just going to continue to put up good growth. And I think their bottom line growth will continue to outpace their top line growth. And if you look at their non-GAAP numbers over the past few quarters, their bottom lines far outpaced their top line growth. And I think that's just going to continue to be the story. I don't think it's the most exciting growth rates. I think you could be used to 7 to 10% type growth rates over the coming years. And I think that's just fine because of where the P's valued at. And with how sticky their business model is. So that's just kind of my opinions and perspectives, and the risk rewards. I think it's just really attractive in terms of what are the chances you lose 50% over the next 3 years, let's say, versus double up over the next 3 years. I think that's a pretty attractive one. It's the most attractive I've seen probably since Meta. So that's kind of the bull case in regards to that.
Can you share? And then question, what about, do you think this is all Fed now? Worried about the Fed now program?
0%. 0% worried about Fed now. I see no material impact on their business whatsoever.
Their forward P is 10, and it's saying versus the industry, it's about half of what it should be.
Yeah. That's what makes it so darn compelling is that valuation. If PayPal's trading at a 30 forward P, I might feel very different, and I might not feel like this is very attractive. I might feel like, that's kind of fairly priced. It's not interesting to me. Down here at these ranges, it's very compelling. So,
what's Visa's growth versus PayPal's growth?
Visa's growth should be,
we can look it up.
I think it's like between 9 and 11% or something like that.
Yeah.
So, and PayPal's growth is 5% from last I heard, not 10. So, am I wrong on that?
Yeah, they've grown about 8% revenues right now, PayPal.
So worse than Visa, and that's the premium people are giving.
See Visa. I'm going to pull up Visa real quick here because I don't want to. Just say
and also PayPal has to use Visa, so that's the other thing. Visa has the better moat.
It depends.
MasterCard has the better moat.
Yeah, it depends on the situation. So Visa's expected revenue growth, let's say for the fiscal year we're in right now, 9.9%. You can say, let's say PayPal's about 8%. So Visa's a slight outgrower on the top line.
Yeah, I think they're being given a little bit higher P because of that, plus the fact that they are the ones who have a monopoly.
Okay, let's get Chris's perspective in here. Chris, here's your screen. Go ahead.
There's just pretty much one chart that I just want everyone to see. This is Visa's total shares outstanding. All right. If you see here, since their buyback program started, they're literally just chopping away at those outstanding shares. And it's accelerating now. All right. What does that mean? That means that regardless if growth or not comes in on top line, it doesn't matter because their bottom line, they're generating so much cash flow and they're just buying so many shares back, which means their EPS is going to get boosted. Now, eventually someone's going to realize this and say, holy shit, even if they have flat growth or very low growth, 5%, this is a very undervalued company because they could just keep buying back shares. Look at AutoZone. I keep highlighting that one company. It has not grown its revenues more than double, but if you look at the stock price, it's 10x. So even if Visa underperforms in terms of total top line growth, their bottom line, which is cash flow, is just going right back into buying back more shares. So you as a shareholder, you're being a part of a smaller and smaller pie. Well, actually, no, the pie is still the same, but the number of slices is getting cut
Mhm.
Can you
down.
bring up that chart for PayPal then to compare it?
But is PayPal doing buybacks?
Yeah, they are.
PayPal's got
But
a big buyback.
PayPal's doing a
on it.
9%
you show the chart?
buyback.
That's PayPal. That's PayPal buybacks.
Oh, got it.
They're
They have
doing
a
about
nine-
$1 billion a quarter right now. $1 billion.
What did you
a
just
quarter
show?
buybacks.
You just showed Visa or PayPal?
No, I said that was PayPal.
PayPal. That was PayPal's.
Right. So
that was
PayPal,
PayPal.
you think,
okay.
right? So PayPal could stay flat, right?
It's-
And just-
They're
Yeah.
guided to do 5 billion annually in buybacks right now. They have some heavy stock-based compensation, but not nearly enough to offset how much they're buying back. They're buying back 9% of the stock annually right now at the low valuation that's at.
I will
That's
say this
amazing.
one thing that someone started to bring up on Twitter, which was it's just the number of employees that PayPal has. I think the new CEO is going to come in. One of the things that they're going to do is try to streamline operations so that this way your cash flows go even higher.
It was
right?
50, I think it was you, Jeremy, that posted that 50,000 people work at
No,
freaking.
I think
PayPal.
it's 29,000.
I saw 50. Hold on, let me see.
Yeah, that's the question, Jeremy. Do you think the company's bloated in terms of labor right now?
I probably slightly. I don't know if it's a massive like. I don't think they're going to do like a Meta type cut where Zuckerberg just came in there and axed tens of thousands of employees. I think they will streamline some more. They'll probably lay off a certain amount.
29,000.
But also, I think Alex KRIS, the new CEO, I think he is also very focused on growth, especially in small business. That's when he comes over from Intuit, he was one of the most important people at Intuit, and we know Intuit's one of the most loved stocks in the stock market, and we know they're in with small business like nobody's business, right? No pun intended. And so I just look at a company like PayPal, and I think they're going to strengthen ties with small business to a much greater extent over this next few years. So that's why I think he's also focused on growth, maybe streamline a little bit, maybe cut a little bit, but I think he's also going to be focused on how do we keep up let's call it a little under a 10% growth rate, a high single digits growth rate year in and year out that people can be confident they're going to grow at that sort of pace. And then maybe that bottom line grows at a 15 to 20% rate, something like that.
I'm curious to hear what Matt Money's big concerns are.
Yeah, Matt
No
seems to be
real
the biggest barrier here,
concerns.
so what's
I mean, the thing is if it was such a great company still, why wouldn't Elon still own it?
So your thing is like
if
do what
that's your
Elon
bear
does.
case?
Yeah.
Elon
do what Elon does.
What?
No, I'm just
Don't
messing.
bet against
But
Elon.
in reality, I mean,
around.
I guess the question that I have for everybody is, right? And, I look for personal businesses that I can either hold for, let's just say 5 to 10, maybe even longer years, right? So, I used to do a little bit more swing trading from a perspective of, oh, this company's down and out right now. I think that maybe they've just been oversold for a lot of the hedge funds, and I can get into it and gain a 20, 30%, gain and then sell it and then move my money elsewhere. I've since kind of gone away from that. So, I mean, I guess my question is are they continuing to innovate? Will they completely change their business model and reinvigorate, the massive amount of potential growth and kind of reinvent themselves? And the answer to me is not really at the moment. I'm not saying that they're not growing. I'm not saying that they're, a bad business. I'm not saying they're not profitable. I just think for me, I'd rather put my capital into something like a Palantir, Rocket Lab, Dutch Bros, where I continue to see the long-term 10, 15-year growth potential. And I just don't see PayPal having that.
So you prefer to buy unprofitable companies?
That's what he said.
Yeah, I guess you could say that. No, I prefer to scope out businesses that are
He's like, do you lose money?
that are
I want
reducing
you.
their risk over time and are going to get to a place where they might have outsized returns.
Wait, but Matt, let me ask this question because I know you said you want to hold for a decade, but at the end of the day, we're all fucking capitalists. We want to make money. Does PayPal not scream undervalued, easy 2 to 3x, even if it's 5 years? So then why not buy it and make some fucking money?
Why wouldn't you buy Altria Group?
No. I think Matt
No one
Money's
knows
right, by
what
the way.
Altria
Just because
Group
you're getting a 2x.
What do you mean?
Well, everyone knows what
Altria Group is one of the best returning stocks of all time. It's undervalued right now.
I know
Why
they
wouldn't
make
you buy it?
cigarettes. I mean, but they're not like a favorite for PayPal.
Is PayPal a favorite?
But that's not a really good.
So Matt,
I mean,
PayPal's
PayPal's
a
a
huge
like
difference
Altria.
between
Matt
Altria
Money,
Group.
I think your point is you want to see massive growth, which I agree with you, because if you're not having growth, like in the companies you mentioned, 20, 30% growth, you can't outperform the market. I think that's what you're saying, that, you know, those companies have a possibility of completely outperforming. PayPal, let's say in 5 years it goes up double, big fucking deal. Like, honestly.
Yeah,
So,
I mean,
okay,
I'm not
don't
saying
you
that.
think the difference between Altria Group and PayPal would be like these are my big concerns, at least with Altria, is like the government doesn't like you. the regulation.
I'm not saying that in terms of comparing the companies themselves. I'm saying in terms of comparing, let's just say, the valuations, right? And there's plenty of companies that are older, maybe out of favor, have yet to innovate, and they've been more so focused on just their core products that are mature. That you could say the same thing, that are trading at single digit price to earnings multiple. And you could say, well, this obviously is going to go into the right direction. You could look at a lot of oil and gas companies right now.
Do they have the same, because I think
Exxon, and you could say they're trading at a single digit multiple. Why wouldn't they be going to 15x or 20x?
I think the thing that
So
benefits
value
PayPal
trap. You're trying to
is
say
the
value
total-
trap.
I think the thing that benefits PayPal is the total addressable market. like even though I believe PayPal is losing market share in terms of the total pie, the pie is growing so freaking fast that it's allowing them to continue to grow as well.
So if that's the case, then why wouldn't you invest in another company that's capturing the market share?
Well, because you'll pay a higher multiple.
Yeah,
you know,
there's really no other option. You can say, okay, I'll buy Square and buy Cash App. But then all you have is criminals using your. No, I'm just kidding. Okay, that's a bear case with Square. But no, in all seriousness, Square.
I thought you were talking about Bitcoin. Sorry.
Square kind of reminds me a little bit of like trying to buy Snapchat stock or Twitter stock versus Meta. I think PayPal is more of like a Meta because you're getting PayPal, Venmo, and Braintree. They have some other businesses as well, but those are the three main businesses. Whereas, you buy Meta, you get Facebook, you're getting Instagram, you're getting WhatsApp, you're getting Messenger, you're getting the Oculus opportunity. So I think that's where you get that attractiveness of like you have multiple growth levers of where this company can grow over the next 5-10 years. And then obviously to Chris's point, if they also are buying back shares, that's just another help of that ultimately
I think the share buybacks to me is really the only place that I see that it can really get back to a place where it can get to the $80-$90 range over, let's just say, the next few years. And it could very well be that they stick with this mature business model and they're able to buy back, like Chris's example. I mean, we've talked about it on Cash Flow Chronicles of AutoZone 84x from I think it's like 8,400% return or 8,000% return since 2001 timeframe. The revenue and the profit only went up 6 times. So you're sitting there like, well, why is this company up so much? It's like, well, they bought back 85 to 90% of the float. So they only have 10% of the shares outstanding that they did back in 2000. So take that 6-7x, multiply that by 10, and boom, there you go. That's the reason why you go to a 70x rather than just a 6 or 7x. So I think you have that same potentially with PayPal. I just, I'd rather invest my money elsewhere. I'm not saying that everybody's stupid, but I do think it's somewhat of a value trap, and I'm kind of curious and hoping that people prove me wrong. And in the meantime, I'm just going to have my money in something like a Palantir, Rocket Lab, and Dutch Bros, and maybe the folks that are investing in PayPal see their 50 to 100% returns, and I hope that they do. I know a lot of smart people that are banking on it. Crossroads, Jesse Dow, a lot of the folks in this room. So I really hope I don't prey on the downfall of anybody. But
and
that's
then real quick, just as because you brought up Elon Musk, Digital Blade California at 6:00 brought it up that X will become a digital payment app soon. The fact that Elon was so closely tied to PayPal. How do you feel about the potential of X being a payment app, and do you think that it would actually threaten?
I like Jeremy's response.
I'm with Jeremy as well. People are talking about a product that hasn't even been launched as if it's going to be the next new thing. It's like no one even has any idea what it's going to look like.
What are you talking about?
Isn't that why people pay massive multiples on Tesla stock though?
Well, how do you mean?
Not everyone knows what the robotics piece or the energy piece.
You can see the robot
of Tesla looks like, but they're paying hundreds of billions.
No, the only reason I say that is
market cap.
Do you think Optimus is priced into Tesla stock?
No.
What's that?
Do you think Optimus is priced into Tesla stock?
No.
Yeah.
I don't think so at all.
Not at all.
I don't think.
Let's get Jeremy. Why won't Twitter kill PayPal?
Well, it always could. Maybe they come out with some new, but the thing is, they would have to do something so revolutionary that it completely changed the game and flips it on its head. And I think it's just really hard to do that because I think there's already companies that are trying to do that. And so I think that's a difficult challenge. Elon Musk has had tremendous success in doing industries that or so doing things that are so much different than anybody else doing it, right? Electric vehicles, like no one was freaking trying to do electric vehicles. And he's like, I'm going to do this. And if you think about obviously what he's doing with SpaceX, like, who else is doing that? Obviously Jeff Bezos, got on track over time with, Blue Origin. But, going to fintech, I mean, everybody wants to be fintech. PayPal wakes up every day with PayPal and Venmo, and that's all they think about is how can we make this product better and better. Apple wakes up every day and thinks about how can we make Apple Pay stickier. Square wakes up every day with their Cash App and thinks about how. And so there's just a lot of super tough competitors. Everybody wants to be fintech, but very few have the scale. And PayPal is one of the very few that actually have the scale there. So,
I wanted to ask a question to you guys that I think is quite interesting. I don't know the last time I've ever seen this in a company. PayPal in the last 60 days has put Alex KRIS on as CEO, Jamie Miller as CFO, Archie Deskus as CTO, Isabel Cruz as Chief People Officer, Michelle Gill, Diego Scotti, Rachel Kobletz, all as Chief or Executive Vice Presidents. They changed out the head of brand and creative. The whole top management is brand new.
Internal promotions or
no. All one from Intuit, one from General Electric, Intel, Walmart Online, Sofi, Verizon, Expedia Group, Cash App.
But that's good. The reason why is because Alex KRIS probably has a team assembled specifically for let me get the best in class for each of these things and put them in charge. So the thing is, when you're transitioning to a new leader, you want people that are loyal to you, not loyal to the old regime and to the old way of doing things. So to be fair, this is actually very risky because you have people who might have known how the business operated for a long time and have been able to make it successful. The thing is, these guys are brand new people that are coming in. So that's the risk. So one of the risks for Palantir, for PayPal is actually that you don't know what the execution is going to look like when going forward. But this is where you have to really look at the CEO and say, okay, has the CEO been in a position before where they have been able to structure a team that's successful? That is what the job of a CEO is. See, a lot of people think that the CEO sits there in a high chair making decisions all day for the business. No, the CEO's main job is recruiting the best people and putting them in the right places to do the job that they're supposed to do. And when they don't do that job, to remove them. And that's it. That's all the CEO really does. Other than just guide the culture. The other thing is guide a culture saying, look, this is our goal. This is how we're going to get there. So right now he's saying, look, we need to start new with a transition team. We're going to get people who are, number one, not corrupted by the old influences of the past and just being steady. But we want to have people that are more like, hey, let's be dynamic. Let's think outside of the box. Let's create more value. And so Alex KRIS feels like, hey, I can get the best out of people and the most out of people by bringing new people in. My thing with that is good luck. And this is one of the reasons why I'm not adding more shares to PayPal or adding more options to PayPal, because I want to see that execution. If Alex KRIS starts executing, I think we still have some time to buy up the shares on the cheap because it's so far below what its intrinsic value should be that we actually do have some time. So if you were to ask me, Chris, would you buy at today's prices? I would say no. I would hold on, wait until this guy executes. And when he does execute and he shows that he's a remarkable leader and that he can go forward, that's when PayPal becomes a buy again. Until then, I'll just hold the shares that I have and that's it.
Could I add to that a little bit?
Yeah, go for it.
So
go ahead. One
one of the things that I thought was quite interesting in the payment space recently, Adyen did an investor day, and that caused the stock to go up 45%. A large reason was this company only reports every 6 months. The transparency is very, very, not common on this stock at all. And so they showed a lot of their guidance and everything like this, and people felt happy to buy back into this stock. With PayPal, this has been what Alex KRIS just addressed in the last earnings call, he said the transparency in this stock is terrible. So he said, we're going to completely change the way we do earnings results. We're going to add in 3 separate people to be appointed to the PayPal consumer side, one for the small business side, and then one to the enterprise side for dealing with meta payments and all these things. So that's already been done. Those people have been appointed. Do you think, Chris, or anyone, that the stock will get a multiple just based on better transparency, better ideas of the KPIs that they're looking at to, understand what they're seeing on their side? Does that warrant an increase in the stock alone?
I will say, when I listened to that earnings call, I was listening when you and Tevis were live streaming it. It gave me goosebumps. I wish that guy was the CEO of the majority of the companies that I owned. I don't know if he is going to follow through with all the execution side of it, but the way and the confidence in which he took over that earnings call on a first time on an earnings call, that I was like, I'll follow this guy to war. What does he want me to do? Does he want me to jump off a building? I'll do it. Like, it seemed like he knew what the hell he was talking about, and he knew what he needed to do, which is steer PayPal into the right direction. And if he does accomplish it, I hope everyone in the stock does a really good job with the returns.
Hey, can I just ask everybody to gently, very so gently, touch the little thumbs up like button? If you haven't already, just gently pass your finger over the like, and then if you want, also hit the subscribe.
So, I mean, there's so much going on here with PayPal, but oh man, I'm not even sure where I want to start in regards to this, but gosh, I lost.
What do you think about all the management changes?
Management changes, okay, yeah. Alex KRIS, he's coming in he's not coming into a broken company, and I think that's the most important thing. There's a difference between a broken company and a broken stock. PayPal's a broken stock. If I think about a broken company, I think about like Mary Dillon coming into, Foot Locker, and, they've got a lot of problems. They had too much inventory, they had margin problems. And Mary Dillon, who came over from Ulta and had a very successful run, she's trying to fix a business model that's very broken. PayPal, if you look at their numbers, like look at their last quarter, look at the quarter before, this is not a broken company. It's a broken stock. And so part of his job is not only, tweaking things in the business model to make sure they're on the right track and get growth going and all those sorts of things, but also fixing the story. The fact that this stock, in my opinion, is trading at a 10 or 11 forward P is laughable. It's like we're trading down there with some of these bank valuations, but yet look at the top line growth and look at the bottom line growth. And it's just like, I think Schulman did a really bad job and had no faith in investors in getting the story told to Wall Street on like why this is a great opportunity, like where we're going over the coming years, why you should be buying the stock. And so I think that's one of the things Alex KRIS hopefully can fix over time. And to talk about Tanner's point in regards to the numbers, transparency, and those sorts of things, very, very key. Now, I'm also curious, how many people own PayPal that are on this other than me and Tannor, or buying?
Me.
I have PayPal.
I think we all own it except Matt.
Okay. And okay, but levels of confidence.
Matt only has options though.
Okay.
Yeah, Jeremy, you're confident, so I'm confident, so it better go up.
Stop it. No, we'll see. No, but I'm curious, like, where's this at in your guys' kind of rankings in regards to the most attractive risk rewards in the market? Is this like 5, 10, 20? I know, Chris, you shared your perspective about you're not adding any more shares here because you want to see execution over this next, few quarters or whatever. But Carlos, VITALY, Tannor, where's this at for you guys as far as that goes?
It just seems like such a no-brainer stock to have in the portfolio that I'm like, I gotta put money into it whenever I feel like, I've got some extra cash, just because it's a stock that I don't think I'm going to regret owning in a few years. It's one of those really just like set it. I don't think about it. I don't watch the price action too much, but I'm hearing enough about it that I'm like, yeah, I want to have skin in the game.
I agree between Carlos and Chris, more on Chris's side, that I have my shares and I don't want to add any more until they prove they are better than we all think.
Mm-hmm.
I'm bullish. The only thing that I'm struggling with is I've been kind of looking back on like what are my core values and how I invest. And one of the things that I recently went over was I like to buy excellent companies at okay valuations versus vice versa, right? And I find PayPal is on the vice versa. It's an okay company at an excellent valuation. And so I'm happy to hold it for 12 months, 18 months, but it's definitely not as easy of a sleep at night stock like for me, my top holdings like Shopify, Nvidia, Tesla, Salesforce. They're so easy for me to hold. I'm comfortable with them. I don't have to worry about it.
Wait, when you say excellent valuations, you mean excellent valuations to hold or excellent valuations to be buying?
To be buying, like they're by excellent valuation, I mean low, cheap,
low.
To,
Okay,
cheap
okay.
to be buying
Cheap.
in.
Okay.
Value
Thank you.
trap.
Yeah. But so I don't necessarily think that they'll be able to compete on the wallet side with Apple and Google Pay and some of these more companies that have the hardware. I don't think that they'll be able to escape that just because there's no PayPal phone. Apple just kind of has just an advantage, but that doesn't mean that they still have 430 million users and they're buying back at 9% buybacks. Like this company could go private before they die. You know what I mean? So I think it kind of falls in that AutoZone thing where it's like, in the short term, it's such a great multiple for me. And if there's no one else that buys in it, it's just me and PayPal, I'm happy.
Well, someone shared a video, and this goes the whole Apple Pay, because I'm an Apple fanboy, always have iPhones and everything Apple, right? And it amazes me how few people I know even have Apple Pay set up. And I'm like, they give you the whole layout
So
as soon as
easy.
you log in. And I'm like, dude, it baffles me. Like whenever I go to transfer money to somebody, it's almost always Venmo or Zelle. Almost everybody I know, Venmo, Zelle. There was a recent video on YouTube where this guy did this prank at a college, and he's like, he's got iPhones, and he's like, it's a brand new iPhone 15. He's like, I'll give it to you for $1, and it's this viral video. Every single college kid except one said, you got Venmo. Every single one, except one kid. And so I'm just like, why are all those kids don't have Apple Pay? They all got iPhones, and yet they're using Venmo to transfer money around. And so I don't know. That's just been something that's wild to me. And that's
I've wondered that too. I just don't use Apple Pay, even though it's connected and it's sort of there. I mean, every once in a while, I just feel like Apple is just not seen as that company. It's the same thing when they tried to start paying. That you would think that they'd be able to create a great social media, a social network, but they just couldn't. The market didn't, not the market, but the greater consumer public at large did not accept them as a social media company. So
No, Apple Pay is actually great when you go to like a Subway or anywhere like that's the easiest thing to do, not PayPal or Venmo. So Apple Pay works excellent in actual physical locations.
Yeah, it's great. But I mean, so obviously you have it set up, but it took me a long time to get it set up. I think I only used it because that one time that I left and I didn't have my wallet.
So
I never use that. I'll just swipe the card.
we're getting to the end. So I have one quick thing, and maybe we can start off with you, Amit. What is your top holding going into 2024? Just one. And you don't have to justify it. Just say which one. Which one's yours?
By the way,
Amit.
Top stock.
Yep.
Wait, so the question is
What's
top
the
stock
parameter
I'm
here?
excited for going into 2024.
Yes.
Okay. So it's not the top by percentage of weight in your portfolio. It's the one you're the most excited for in
Yes.
2024.
Yeah,
That's
either
for sure.
one. Yeah. Hopefully it's both, right? You think you'd be the most invested in the one you're most excited about. But yeah, go ahead.
Yeah, I mean, for me, it's obvious. Palantir is the most exciting company in the world. I think 2024 is going to be incredible. I think the recent run-up has potentially overextended the price, and maybe there's a bit of a pullback. I was talking to Jesse, who's a technical god on Twitter. He said there's some gap that's going to get filled at 15, so maybe that happens, maybe it doesn't. But in general, enterprises are going to spend 8 to 10% of their budget on AI. The world is getting more complex. Geopolitically, we're having a lot of issues, and I think AIP growth of Palantir is just starting to ramp up with this new bootcamp go-to-market strategy. So it's the biggest position I have, and it's the most exciting company in the world. And I think it's going to be a really exciting 2024, regardless of what happens to the stock price. I think the company will perform. By the way, real quick, OpenAI is going to do $1 billion in revenue. They're valued at $86 billion. Palantir's $40 billion is going to do about $2.2 billion in revenue. So just to give some context,
one has made money off AI and the other one hasn't. So I don't know.
Tannor, are you insane? Palantir's been doing AI for 20 years. Did you actually say that?
You dragged them in.
Just say one has been doing. Okay.
Hook, line, and sinker, dude. Just like.
All right, Jeremy, your turn.
It's like if they fired
AI
I would
before
buy
they were lettered,
Palantir.
A&I.
Forget it.
Goodness
Amit's
gracious.
head explodes.
All right,
Okay.
Jeremy, up to you.
So, Amit, by the way, I would love if you want to ever pull up some of your Palantir projections, revenue, EPS. If you got anything like that, I would love to see that before we end the stream tonight. That would be freaking awesome.
I don't have them, but we did a whole DCF on Palantir Week. I'll send you that because we did a lot of that stuff on DCF last week. So.
Yeah, even if you got just something you could throw up, that would be interesting to just kind of debate that before we leave. But so number one biggest position would be Meta. But that's not necessarily the stock I'm most excited about for 2024. I'm most excited about PayPal for 2024. I think, Meta's obviously ran a lot. I think Meta obviously still has a ways to run. And I look at it a little longer term view, right? And so I'm not going to say, because I'm more excited about PayPal, I need to funnel my Meta money into PayPal. It's not really the way I view it. But I think I honestly think fintech. I'm very bullish on fintech for 24 in general. I think a lot of these stocks are bottoming now. So that's just kind of my opinion and perspectives there.
Carlos.
Here we go.
Bitcoin. Are you going to be Bitcoin?
Right here, share the screen, baby. Bam, suckers. Tell you. Bitcoin having 5 months, brothers. Yeah.
Carlos, why do you like fake money? What is going on?
I think Bitcoin. Well, I don't. We'll see, because Bitcoin's peak price usually doesn't come till after about 100 something days after. But I think Bitcoin could outperform anything anyone on this podcast would say right now. I think Bitcoin is poised to do that with this amount. It's with this amount of positive catalysts that are coming up, also happening in a halving year. I think we could see a monster run. And Amit, you might regret not picking some up because of the return that we could see even from here. So,
hey, real quick, I got to say this. It's always fascinating me how confident Bitcoin bulls are in Bitcoin. Like, I remember so vividly a Millennial Money episode in 2021, and Andre goes,
yes,
Jeremy,
I remember.
You remember that?
Yeah.
Bitcoin will outperform every asset
Everything.
class, every single stock you could possibly buy, and just said it so confidently. And so yeah. Anyways,
we've had this discussion several times with Chris and I. And I mean, if you the halvings are basically built in like buybacks. They're just built in buybacks, and it's the share dilution or the coin dilution is set. We know when it's going to happen. It's planned. There's so many things about it that make it such a sound financial investment, where it removes some of the things that are typically risky with other asset classes. And we're also seeing massive adoption of it now, where it's just been legitimized in a way that it hasn't been for the entire time that we've been holding it. So I think that this next run that we're going to see is going to dwarf what we saw last time, and we'll see a 6-digit Bitcoin, a 5-digit
dwarf. And
Ethereum.
I have a question for that. Dwarf in terms of percentage return, or dwarf just because it's going to be such large numbers now?
Large numbers, because the percentage return cannot equal what it did once when the market cap was so low and the amount of available coins were. It's
but I still think 300% return.
Say again.
I think 300% return and the cycle is not something that's impossible.
I agree. I don't see. I mean, I don't see anything more than a minimum of 150. I'm seeing some price targets for 350,000, which might be like the Uber bulls, but I think somewhere in the 150 to $200,000 range. If you just do the math at how much money needs to come in, Jesse Dowd did a great breakdown of it, where it went from 25,000 to 30 something. That had the $9,000 increase per coin in a single day, from something like $70 billion. So it was basically double the market cap of Palantir, whatever it was at the time, went into Bitcoin in a single day. You just don't see that amount of money. I mean, if that amount of money went into any one of our single stocks, it would shoot to the roof. But just off of that, it had a 70 billion increase from $193 million worth of actual invested capital. So essentially, Bitcoin's market cap increases $193 per dollar that's invested to it, just because of the speed of the capital coming in. If we see these ETFs get approved in January, 4 months or 3 months before the halving, then the halving event happens. Miners have stopped selling. You're just seeing everything is pointing to this thing shooting through the moon. It's not even like me. It's not even like Hopium. This is what it was designed to do. This is literally what it was designed to do. It's a fiat currency that can't be inflated away.
All right, let's go to Vitali, your stock.
So I'm going to caveat with different things. Bitcoin is actually one of the things I'm more in Ethereum. Those things I think
Ethereum
though will
too,
play out at the end of the year. So at the beginning of the year, I'm not excited for Bitcoin in terms of outperforming. I don't think it'll do that in the beginning of the year. The halving event doesn't necessarily mean a big run up is going to come. So I still think we are at November, December timeline. So having said that, that's the end of the year. I really believe Bitcoin is probably going to six figures, and me and Carlos will be happy. I think Matt Money has some Bitcoin too. Okay, so that's one thing. But in terms of the beginning of the year, I actually think Amazon is supposed to. I've bought options. I have lots of shares. I think Amazon is going to do incredibly well in the beginning of the year. So I'm really looking forward to that. And I've already been doing good on the leaps I have.
Well, that's true. Once they print their Q1
well,
number,
I already had leaps at 100, so it's doing incredibly well right now. So that's happening. And you thought I would say Enphase, of course. No, I don't think 2024 is the year for Enphase. I think it's more likely 2025 or so when the rates finally start to come down. But that just gives me more time to actually buy more. So I'm more excited about the Amazon, Bitcoin, Ethereum, because I'll just keep buying it if it tanks. I'm not buying more right now because I think it's run up a bit.
Mm-hmm.
All right. Tannor,
how much stuff are you
I gotta say it. It's Sofi.
doing?
I think over the course of
each person guesses what the next one's going to be. You got to guess what KRIS is going to. You got to guess how much Verizon he's going to buy.
How much Verizon leaps?
I think 4 quarters of straight profitability next year in 2024. Large financial institutions pivoting over to SoFi's Galileo platform. As much as KRIS wants to say that it's just like any other payment processor, they own 90+% of all accounts that come in through neobanks. They're by far winning whenever it comes to fintech. Deposits as a percentage of funding, I believe, will go over 90+%. It's right now at like 65%. And then even after that full year of strong growth in members and what they want to hit, eventually 800 to 1 million new members per quarter, all that great opportunities, student loans coming back, rates going down, allowing their total book value to actually skyrocket if we want to sell it. All those good things after that, then we tackle small to mid-sized banking, insurance products. They already said they want to be the principal on the insurance products. And plus, you're buying it at a depressed rate. So that's my bet.
Okay. Matt?
Yeah, I do. I'm not going to say SoFi, but I think SoFi is good, Tannor. I'm just doing some back of the envelope math here, and it looks like just based off today's price, it's been sitting about $6.5 billion, and the adjusted EBITDA for the year should be closing out close to 400. So if you look at it from a price to adjusted EBITDA perspective, it's like 15, 16, which is pretty impressive. The one I'm going to go with, if I had to choose an ETF, would be just the regular old S&P 500. But I know you guys are going to say it's a cop out, so I will not choose that. Yeah. The one I like, and you guys have probably heard me talk about it before, is Rocket Lab. It's on a trajectory in 2024 to double the amount of launches that they had in 2023. We had 11 launches this year in 2023. They're hoping to do 22 launches next year, their small launch vehicle. They're also trialing out their Neutron rocket, which is medium launch. It's supposed to be in competition with the Falcon 9 rocket as well. And they also have a very competent space systems program with solar panels and several other opportunities in there as well. Run rates in terms of revenue has been kind of running at the 60 to 70 million range. And in 1Q, they're hoping to up that to a run rate of closer to 100 million. And so if potentially everything goes right, I anticipate that they might start seeing kind of a cash flow break even. And that's going to be massive considering they've been on such a cash burn trying to get this new rocket up in space. And really, if you think about it, there's a lot of people that are just down in the market overall for space systems and launch, obviously, because a lot of people have had complications. It burns a lot of cash. And there's very few companies that have actually succeeded. SpaceX is one that we recognize as all very successful. ULA, which is a joint venture between Boeing and Lockheed Martin. But Rocket Lab is really the only one that's launched, 40 odd rockets with an over 90% success rate, out of somebody's garage, basically, to the point where it is today, being a $2 billion company. And on the brink of kind of cash flow break even. So I think that one could have very large 5 to 10x returns within the next 10 years. And it could eventually be something that has a 20 to 50x if it gets as large as to what a SpaceX is, but that's a tall order. But I think that in 2024, they'll have a lot of large catalysts for that one to see if it's really going to be a make or break for the stock.
When is the next Electron launch?
They said the 28th of November. So they figured out what the anomaly was that caused the last failure. And so with that, they think it was an arcing associated with electronics or something like that. So with that, they're going to get back to launching on the 28th. And then hopefully next year, it should be close to 4 to 5 launches per quarter, which they said, which is one of the pieces of information I'm going to get into the room. They're hoping at a launch cadence of about 6 launches per quarter, their gross margin on the launches themselves will be 50%. So if you think about it on a launch basis, getting 50% gross profit is pretty impressive. Mm-hmm. And so to be able to put that directly towards offsetting any SG&A costs really should get closer and closer to that.
We should try to live stream it if we can get it together, depending on what it is. Let's live stream it and watch. I love those things.
Yeah. Me and Vince have been doing Rocket Lab Weekly, and I cover Rocket Lab pretty intensely on the channel as well. But would love to have you on.
Yeah, I just love watching those rockets go up.
Chris, tell us about Verizon.
All right, Chris, your last one.
So,
what do they do?
God damn it! Thanks a lot, Matt Money. Thanks a lot.
Oh, there we go.
You ruined it.
I saw this yesterday.
All day, but the fact that we're about to hit 200 million subscribers actually makes me kind of happy. Since we're about to hit 200 million subscribers, this would be a super convenient time to talk about Verizon Home Internet that actually provides internet connection so I can watch the 200 million live down here while I tell them about the sponsor.
That's a good point. Verizon 5G home internet
is exactly what it sounds like.
It's wireless internet for your home that runs off Verizon's extremely fast 5G ultra wideband network.
And when they asked if they could sponsor this video, I asked, does your internet work 10 feet underground?
We're turning it on now.
Nice. Okay, I'm connected.
And now you're going to watch us hit 200 million.
And just by plugging in this little box, thanks to Verizon, I now have America's highest quality 5G home internet. It actually works. Even though I'm 10 feet underground, I can see my real-time subscriber count. Carl, did you know that if the people watching this video are over 18, while supplies last, when they order Verizon home internet, Verizon will give you an Xbox Series S on them.
They must hate money.
I mean, honestly, yeah. And you can get it for as low as...
All right, so we just gave
Mr.
Verizon
Beast.
some free promo for Chris to pump his stock.
People are really, really underestimating how crazy the growth is going to be in fixed wireless access for internet. Verizon is probably one of the companies that benefits tremendously in terms of top line growth from fixed wireless access for a lot of users. Now, the key here and why it didn't happen sooner was because there had to be a lot of spectrum clearance. So if you do any research on how spectrum clearance works, there's certain signals that need to be broadcast in order for you to capture that signal so that you can have this bi-directional connection to the internet using a cell phone tower. 5G is super low latency, high bandwidth. It's easier to deploy, easier to get users on it. The installation time is barely anything. And Verizon has some of the best spectrum, and they use something called millimeter wave, which is a amazing technology. It works really well in terms of densification. And yeah, okay. So I think Verizon has been spending a lot of money on CapEx over the last 4 years to get this 5G infrastructure deployed. And according to their guidance, they're going to be trimming that down significantly, which leaves them a lot of room for deleveraging. And then after that, possibly some buybacks. With a 7.5% yield right now, just on their dividend, which has been a 17 years of dividend growth, you're going to see, if we do hit a deflationary cycle, which is more than likely happening right now, you're going to see the Fed start cutting rates, in which case people are going to be chasing yield. So right now, companies like Verizon, which are very cash flow accretive, they are going to be bought up, and you're going to see this giant chase for yield that's going to happen. And this doesn't just go for Verizon. There's a lot of other telecom providers that I am actually bullish on also, not just like the frontline company like Verizon, but then also secondary and tertiary companies that provide services to telcos. The other major thing is if we do get hit by a recession, which in all likelihood is a very real possibility, traditionally companies like utilities and telecoms actually outperform the market because a lot of people are looking for safety. So imagine you as a consumer, if you're waffling and you're about to lose your job, or you do lose your job, the last thing you're going to do is, yeah, let me cancel my cell phone plan. Let me stop my internet. Everyone is going to need those things. So they're very insulated against recessionary impacts. So I think a lot of people are going to be looking for safety. They're going to be looking for yield, and they're going to buy a Verizon.
Cool.
Okay.
That was really good.
I think that's it for this giant megapod. 682 people. Thank you for being here. Everyone's YouTube is in the description, so you can.
I want to call it.
You probably already know Jeremy, but
yeah,
you're probably new to this channel.
We have to use that as
a Financial Palooza.
Yeah,
Jerm, when are your Twitch streams?
Twitch streams 12 to like 1:32.
How's that going? How do you like that versus the YouTube thing?
It's fun, but you can't grow on Twitch really. It's just my core audience coming to watch. It's not like YouTube where it just, it's massive and it gets fed and there's like a whole like platform, where these videos get fed against these videos and things like that. Twitch is so much different. So I enjoy it. Is it necessarily the best return on investment for me? Probably not. But it is fun.
What's the incentive? Like, what's the incentive for you?
Well, I did an exclusive deal till the end of the year with Twitch. So
is it only with you, or is it with other financial YouTubers as well?
From my understanding, they only did a deal with me. I haven't heard from anybody that they, did any sort of deal or have a deal with Twitch, but it's something to try out. We'll see where it goes next year. The earnings live streams, when it's like a big stock reporting, those are the ones that it seems like most people are interested in. So like PayPal was huge, Tesla stock. I'm sure Nvidia will be pretty big this week. So freaking Palantir had a report before the bell. Damn it. Like, come on, Carp, start reporting after the bell. That would have been an epic live stream. But anyways, they had to screw it
Can
up.
you let them know
I just want to say
do it for... You're in my jump.
Yeah,
Can you let them know that we'll do a live stream for 1/10 the cost that you're getting?
I just want to say there's 650 people here on a Sunday night, and it's because all of us care about like the stock market, right? I know for some people it's entertainment, for some people they're trying to learn. It's like, it's really cool just in general to look back on this. And Jeremy kind of started this whole thing back in 2016 when he made this market become interesting on the internet, where people actually care about taking control of their lives, allocating capital to assets, whether it's $100,000 or $10,000 or $1,000, and trying to get educated, because 99% of America and really the world has no understanding of what equities are, right? And so all of us making this content, playing around with it, trying to give our perspectives and thoughts. At the end of the day, it's all to make money and to use that money to buy a pool, to change your life, get a fancy house where you never have to cook like Jeremy, right? That's the point. And that's what we're doing here.
100%. Hey, Amit, before we
Yes, sir.
sign off, can we not see some Palantir projections? I've never in my life seen like any revenue or net income projections. EPS, do you have
All right, guys,
anything
I'm out.
showing?
I'll see you.
Okay, while Amit does
come on,
that, I'll say goodbye.
I want you
See you guys later.
Come on.
I'm
it's a
down
lot,
to talk
Jeremy,
about it if you are, Jer.
I think we should
I
do
wanna talk
another
about it. I just
episode.
wanna see.
I mean,
Whatever projections are out there, they're all going to be pie in the sky, dude.
yeah,
They're
that's
like
the problem.
business-
Because the
yeah.
DCF, we did a reverse DCF with Arnie last week, and we did the calculations of what Palantir has to do to be worth $18.50 a share. And the CAGR was like 30%. The dilution was, it was a lot of real heavy assumptions. And now it's at 2050. So now those assumptions would be like 40% year-over-year growth, like some ridiculous numbers to justify
All
this.
right, they're
price.
going into it, guys. I'll see you
Why
later.
don't
It was
why don't you just share this? This is
All
pretty
right.
funny to end on. This is I sent this in the chat yesterday.
What would you choose between Apple or Tesla if you had the money to buy it?
What's that?
The companies. If you had the money to buy Apple or Tesla, what would you buy?
I just told you I don't invest in the stock market.
But in companies,
I wouldn't invest in either.
either of them.
No, so I don't get my money back. I want my money back.
Okay. Gold or Bitcoin?
Gold.
Fight or flight?
That's a stupid question.
People that fight lose.
So what? What's wrong with losing?
Okay.
I think the stock market is for losers. Why would you put money in the stock market when it's manipulated?
What would you?
Okay.
I've
So
seen that
all of us are losers. Then. That's
I
Yeah,
couldn't
there you
believe that. I saw that last
I mean,
I mean, I
he
knew
is
that, but
right. It
that's
is
just-
manipulated. It is manipulated. I mean, no one can deny
Yeah,
that.
but
He's been
hopefully
calling
on
for a
the-
recession for like 30 years too.
Yeah,
I mean, that guy. you know.
yeah. Robert Kiyosaki is a very smart person, but there's certain things that he's delusional on, and so it's
Yeah.
like, oh, I want my money back. Okay, then sell, boy. What do like?
Yeah.
The gold that you buy, what are you gonna do? Hold it forever? No. If you need the money, you sell some of the gold. Boom, you get money. That's how
I know.
fucking commerce works. So whatever talking point he wants to go with, congratulations, bro. You know,
And at least you make dividends off some of those stocks. You're never going to make your
True.
dividend off
Yeah.
your gold bars that are sitting in a safe that you have to pay to protect. Like,
Yeah.
Well, anyway,
All right,
I want to say thanks. I've had conversations like this, like long ass debates, like about UFC fights. You know what I mean? But like, I'm glad to have these kind of conversations when it actually translates into us being able to make some money. You know, because talking about sports or whatever, it's kind of like it's kind of useless. I enjoy this. I enjoy this a lot.
Now we just have to convince
Definitely.
him to buy Bitcoin.
Yeah.
Never gonna
If you guys want to leave, you can. For anyone who doesn't, we'll give
Oh
you
yeah.
like
All right.
5
I'll see you
minutes
guys
on this.
later.
Bye.
I'll stick around for this one. Why
So
not?
this is the reverse DCF we did on this with Arnie last week, and he basically baked in a ton of assumptions to justify the $18.50 range. And so you've got growth of 30% from 2040 until 2034. So for the next 10 years. And again, all of this results in a fair value today of $18.50. Free cash flow margin, 25%. Then he uses a weighted average cost of capital of 11%. Number of shares dilutes 3%, sorry, on average. Probably some years it'll be 5%, some years 2%, but 3% on average. And then after you put in all those numbers, you get to a terminal enterprise value to free cash flow multiple of 13, which gives you a fair price share of $18.05. So this would be doing like 10. This is a bit more than this is 10.5 billion in revenue by 2030, essentially. Oh, sorry, no, it's 2030, 13.9 billion of revenue.
So
By
yeah,
2030.
I got to run too because I got dinner. But this is a poor way of looking at it, and maybe we can get
Yeah.
into
We got to
You
do
should
better.
look at the stream when me and I forget who else. I think it was me and Steven. Was it me and Steven? Who was it?
But remember, it's a reverse DCF. It's not like he plugged in
Yeah.
those assumptions optimistically. He said, if this $18.05 is fair to pay, what would have to happen? And so that's what created the DCF,
Yeah.
not like
I think even asking that question is flawed, to be quite honest, in kind of running it that whole way. But anyways, that's a super deep subject. We should get into it sometime because, let me ask you this before we sign off. Do you think analysts' EPS projections are accurate that they have for Palantir for 2024, or are they too low or too high?
EPS is tough. I would say if you were to talk about cash flow, that's easier to talk about because the EPS piece, you're going to have to incorporate it specifically on a GAAP basis, share-based compensation, and make assumptions on that. So you're just layering on so much. I mean, to me, we're going to end this year, I think, with close to 550 to 600 million in cash flow, of which 160 million of which is going to come from interest income. So about 450 to 500 million, maybe 550 million in terms of cash flow from operations. To me, next year, I think we're going to end in the 800-ish range. And then in fiscal year 25, I think from a cash flow perspective, we're going to end close to 900 to 950 million. So if you're going to eventually get to a place where your share-based compensation is about 400 million, that means you're generally speaking going to be left with about 500 to 550 million on a net income-ish basis if you're looking at fiscal year 2025. And so in that perspective, I think you're still trading pretty richly because, you're, I think you're.
They're going to have to fucking grow this year. They're going to have to, they have to justify this value. They got to grow. And if they don't grow, then.
Yeah.
And you have no opinion, Amit, if analyst estimates are correct on as far as EPS goes.
I think Mariana's EPS projections are correct. I think that's the $21 price target. That's the one I've studied the most. I think HSBC has something similar to her, but the stock's basically at 21, right? $20.50, whatever. And Mariana's counting another years of earnings, another 2.5 billion of revenue to get to this $21 price. And so that's why I kind of feel like, and she's using some decent assumptions as well. I'm like, okay, this is this is really a lot of the hype. Essentially, it's around Palantir. Investors are paying a premium early for that growth before it comes. So that growth's got to come, and if it doesn't come, it's going to be
No,
so when you say EPS forecast, are you talking about like
just the
14
EPS
cents?
forecast? Analysts have estimates for EPS for Palantir for next year. That's all I'm talking about. I'm not talking about share price. I don't care about any of that. I'm just talking about the EPS that analysts have on average. Do you think that's correct or too low, too high? They have a look at Seeking Alpha here. They should have.
It could be lower if Palantir does buybacks as well, but I don't know. That's definitely not happening at 20.
They have 29 cents. They have them doing in fiscal year 2024.
Right now they're at 3 cents.
29 cents I could see maybe on the upper end. I think that the problem is on a net income basis is that you still are going to have $400 million worth of share-based compensation that you have to account for. If you add that back in on an adjusted EPS basis, I think you'll blow 29 cents out of the water.
That's what they're doing. They're not going off of a just straight gap basis for these projections.
Yeah, so, from an adjusted basis, I think 29 cents is really good, because if you look at that, you have 2,300 2.3 billion shares, which I'm just using 2,300 for my calculator. That's about 650 to 700 million in terms of basically adjusted EBITDA. And I think that that's probably slightly conservative. I think you'll get closer to 800 in fiscal year 2024. So I think 29 cents is probably middle of the road, if not low.
Numbers, by the way, 17 analysts. That's their average is 29 cents for this year. They have 25 cents EPS, for 2023, and that's six. It's weird. They got 16 analysts that have numbers for this year, but yet 17 for next year, which is strange. But anyways. Which if you've taken 25 cents and then 29 cents next year, it's only 18.7% growth, which is once again, that's pretty low for a company that is just getting a profitability. But anyways, I was just curious if you guys had any, thoughts on that specific. So
yeah, I'd be closer to 30 to 35 cents personally.
Okay.
On an adjusted basis, right? Not good.
Yeah. Okay. Cool.
All right. So if you guys, if you, yeah, I have to do the super chats. I realized I didn't do any of them. So if you guys want to leave, that's totally fine. Jeremy, you're free to go. I'll do the super chats real quick. And yeah, that's it.
I'll see you guys later. Thank you so much for having me.
Appreciate it.
Thank you, Tanner, for joining.
Bye,
guys.
Thank you.
Appreciate
Have a good night, guys.
You guys are up. I'm curious. I'll stick around for these super chats.
Okay.
I'll sing you to sleep.
Richie.
What's up, Chris?
$5. When you guys talk about PayPal, can you bring up the opportunities for buy now, pay later and how the stock could react? Okay, we didn't do that. Sorry, Richie. Adam 411 says, Daddy Carp says, fuck your puts, point blank period. Chris, you lost.
I'll be honest. I know. Well, no, not yet. Or Snowflake earnings are next week. Maybe they, probably not, but whatever.
Yeah.
I'm just getting ready.
$1,000 you got to.
It's fine. Whatever. It's all good. You know what?
Man, go ahead.
No, it's going to Adam's kids. So I'm cool with that.
Well, Adam doesn't need the $2,000 because I was talking to Adam the other day. He's making so much money off Palantir. Like that $2,000.
Oh, I know.
Really just very on top for him. So.
Oh, I know. But still.
How many shares does he have?
He has a lot, bro. I don't want to say it, but he has a lot. He has across multiple accounts. He has a lot of shares.
Good for him.
And he's wheeling it too. So, Bitcoin Man says, I don't buy SoFi because Liz Young is 100. Yo, Liz Young is one of the prettiest analysts out there, but she's a bear. So it sucks watching her because she's like, yeah, you're gonna lose all your money, but she's pretty when she's talking about it. So, shout out to Liz Young, who also never mentions that SoFi ever when she talks, which is interesting. TJ, I'm bag holding 12,000 shares of Enphase at 125 adjusted cost basis. We all know about my 500,000 shares of SoFi. Let's talk Enphase. Okay, we talked Enphase and we reached zero conclusion on Enphase. Mike's Oxhard, $5 all in Avant brand stocks. I don't know what that one is, but okay, all in Avant brands. Bitcoin Man, Warren Buffett has been buying PayPal inside. I do not think he's been buying PayPal. Probably a different stock. TJ says, what stock is everyone still underweight? Mine is Tesla. I'm 2,700 shares under deep, but just can't seem to grab more shares because I'm stuck on valuation. I feel like everyone's underweight Palantir here, but Chris is probably no more in the sense of maybe he wants a little bit more Verizon, something like that. Matt, probably Rocket Lab, right? Is a little bit, you're more underweight.
Yeah, I'll probably be buying more Rocket Lab tomorrow.
Okay. ET FaceTime Home is contributing to rent for the finance junkies. $5. Thank you, ET FaceTime Home. We definitely need it. Appreciate that. And then we got Estebans who says, Amit, take Kelly on a date. $2 super chat. And then he says, $5 super chat, marry Kelly Amit. This whole chat is just obsessed with Kelly and I appreciate that, guys. I did take Kelly on a date. We went to Vegas, and Matt was there, Chris was there, so we all got to meet each other. I got to meet Kelly.
Kelly was there?
So Kelly was there. You didn't notice? She was there.
I saw a bunch of computer images like floating around, but I didn't actually.
No, she was there.
There's one.
No, it was really nice to meet Kelly and Amit in person. And
what do you
Chris.
guys think? What do you guys think about this whole open AI Microsoft thing?
That's pretty crazy, man.
Yeah, dude.
The thing, I get the laying off piece, but the thing I think is most admirable is all the employees getting it together and say, you either bring them back or we're all going on strike, basically. And the fact that they actually listened and that's actually ongoing. I don't know what's happened over the past 2 or 3 hours because I've been on the stream, but the fact that they were even kind of like extending or potentially even contemplating it to bring back Sam, I think is absolutely wild.
Did you guys see the Jason
He's
Calcanis?
not back yet. He's not back.
Yeah. Did you guys see the Jason Calcanis thing that he did, the meme that he put out?
Not a meme. I saw a really good great. No, I didn't see this.
R2, stay with the ship. Welcome, Lord Vader. We've been expecting you.
Twitter headquarters.
Not even the younglings survived. Who could have done this?
My resolve has never been stronger.
In order to ensure the security and continuing stability,
This is the best part.
the Republic will be reorganized
Into a profit C Corp.
That's hilarious.
empire for a safe and secure
So this is how liberty dies. Thunderous applause.
That was so good.
It's pretty crazy, man. I mean, what do you think the sequence of events was behind the scenes? I mean, you were pretty much on point with respect to, you think it was Ilya who basically kicked him out. I've read a few kind of like sequence of events.
So there's
All right,
been
guys, I got to dip because I have a meeting in a couple minutes, but you guys, I'll keep the stream open. I'll close it once you're done. You can talk about 10 more minutes. Okay.
I think it was very.
Bye, guys. Thank you for joining. See you next time.
You know what?
The Cash Flow
cover
Chronicles
this.
are taking
Chronicles. We'll cover this in Cash Flow Chronicles.
No, we're taking this over. We're taking the channel. We're
All right,
taking
fine.
everything.
2
Cash
minutes.
Flow
We'll do 2
Chronicles.
minutes.
We're switching the name out. Everything.
We'll do 2 minutes of it. So basically, there's been a fight in the AI space between accelerators and decelerators. So some people are saying, look, we've gone too far. We need to slow down. And so that's the Ilya camp. And then the other side is, hey, listen, this is the next form of computing. We need to go gung-ho and hard. That's the Sam Altman crowd. So Silicon Valley itself is wrapped around this right now, where they're just trying to choose, like, which one do you want to go with? And so the people who are decelerating right now or want to decelerate, they're trying to put their foot down and say, no, we are going to slow things down. We want to do this thing safer, but safer also means slower. And so if you look at different companies around Silicon Valley, they have different factions within their AI researchers who are for developing faster, and then others that are developing slower. Google, in my opinion, has one major problem in terms of monetization, is that they have a lot of people who might be decelerating. Because I mean, if you look at Bard and not just Bard, Gemini, Gemini
like
got pushed back. No, Gemini got pushed back again. So they were supposed to come out in November, but they got pushed back until Q1 of next year. So this is one of those things that
so that seems like a pendulum swing for Google, though, because like originally everyone was kind of worried about the sentient sort of AI that was kind of sentient AI. Yeah, that was kind of coming out of Google. And do you think that the publicity there, probably about a year to 18 months ago, really kind of put a thorn in their side, and they said, we can't be responsible about this, and we really have to kind of take a little bit better of an approach rather than the way they've been going? And then following into how this relates back to OpenAI is obviously Sam and Greg were kind of full fundraising mode, and so you think that had a lot to do with what was kind of going on, and they said, let's kind of just do what we're doing right now, take it slow, rather than
I think
going
it's
for
nice
full funding for GPT-5 and all that.
I think it's nice that people think that a lot of the employees like stayed for Sam Altman, and I'm sure that some did, but most of them stayed because without Sam Altman, the valuation of OpenAI would go from $80 billion to like 5, 10, 20 billion, maybe, if that, in which case now they're all going to be losing out. So their whole thing is, hey, I need to protect all my investing that I've done in terms of time, effort, and energy, right? Because at the end of the day, dude, who wants to see their portfolio or their net their net worth drop by 80% or even 90%? So, I mean, like I said, I think by Monday morning, Sam Altman either will be back or a new company will be created, and it'll just fold in some of the AI, the non-profit versions of OpenAI into their mix. But we'll see what happens. But the board is not going to survive. At least I don't think so. So we'll see.
Yeah, after something like that, I mean, that's too crazy. Yeah. There's definitely got to be some change, right? Especially if Sam comes back, I mean, something has to change, right? You can't just be like, okay, by the way, sorry, like let's figure this out. It's like, well, but that's crazy. I mean, if that happens, I mean, I feel like you end up having to go and have to lean towards, if Sam and Greg come back, you have to lean towards the basically for-profit camp that is wanting to kind of go and not put a break on how fast you're going. I mean, I don't think you could go another route.
Well, listen, man, I'm tired as hell. I've been out all day, so I'm gonna head out. Maybe we could talk about this more on Cash Flow Chronicles. What does Scotty say? Let the 6 out of 10 drunk guy come on live for 2 minutes and ask. Scotty, we will do that. I promise tomorrow. All right. So just grab stop drinking now and just grab a few beers before Cash Flow Chronicles tomorrow. We promise we'll have you on. All right.
Well, we're not on tomorrow, but we can be if you need to be.
Tuesday. We'll be on Tuesday.
Tuesday. I'm trying to think. I'm traveling back to Pennsylvania, so this week I have to figure out when and where we can do it. But I think by 9 p.m. Wednesday. I should be good.
Okay. We'll see. Yeah. We'll play it by ear. All right.
All right, my guy.
Later, guys. Have a good one.
Later on. Cheers.